Yes, people, a very, very happy month, all of you. So, guys, we're doing this chapter called as accounting process. In that last class, we started our discussion on the concept of journal. Correct? So, guys, what is journal? So, journal is a book where we record the transactions on day-to-day basis in a chronological order. This is where the transaction effectively first time it is recorded. That is what is called as book of original entry. This is the origination of the accounting records. Now, this is also called as book of primary entry. This is the first time where you're primarily recording the entry. So it is also called as book of primary entry. And in the last class, we discussed the format of the journal. So I hope all of you know this and you're familiar with this. Now, we understood there are different types of journal entries. Totally, how many types of journal entries? 7 types of journal entries. In that, I've discussed only 2 types in the last class. One is single entry. This is also called as simple journal entry, in which there'll be only one account in debit and one account in credit. There's something called as compound entry, where there could be more than one account in debit or more than one account in credit, or more than one account in debit and more than one account in credit. That is called as compound entry. I meant to discuss with all of you the opening entry, closing entry, rectifying entry, adjusting entry. Yes, we had a discussion about the transferring entry, not in particular here. When I discussed the concept of the drawing, I said whatever the drawing is done, the total drawing on monthly basis or regular basis is parked in the drawing account. At the end of the year, whatever amount is there in the drawings account, you have to transfer to capital account. You have to minus from the capital account. You have to adjust against the capital account. So I said that time that we transfer this entry in the capital account. So that entry is called as what? Transfer entry. So transfer entry is nothing but when you try to move the amount from, when you try to move an amount from one account to another account, it is called as transfer entry. So example for that you can take as the drawing which is getting adjusted from your capital account. Rest other entries I meant to discuss. Then we discussed the concept of discounts, different types of discounts. We saw something called as trade discount. Trade discount is a discount that is provided by the seller to the buyer only when the bulk purchase of the goods or products has been done. Okay. So now, when you go to the shopkeeper, he will give you one price called as list price, also called as catalog price, also called as mark price, also called as gross purchase price or gross selling price. Gross purchase price from whose point of view? Buyer's point of view. Gross selling price from whose point of view? Seller's point of view. Now, he will give you this value. From that, you will always minus trade discount. Less trade discount at the rate of, let's say, whatever percentage it is. So that you minus it. And the balance value that you get is called as net selling price or net purchase price. Net selling price is from whose point of view? Seller's point of view. Net purchase price from the buyer's point of view. Guys, this is the price at which the buyer will record his purchase and the seller will record its sales. Always will record the purchase and sale at the net of trade discount. Net of trade discount. Then from that, if there is any further discount is given called as cash discount, that cash discount you will minus it from that. This is the balance money that you receive. So trade discount is a discount that is offered by the seller to the buyer at the time of bulk purchase. Then what is cash discount? So cash discount also is a discount offered by the buyer to the seller. But now this time it is for the payment. Which type of payment? 3 types of payment. Immediate payment or early payment or prompt payment. Immediate payment means what? On the date of sale, immediately across the table, when the goods are exchanged, I want the money to be received. So that time I offer a special discount called as cash discount. So while exchanging the goods, trade discount was agreed. Credit sale was made. Credit period also agreed. But we were not believing that this person will make the payment on time. So to induce him to make the payment now itself, we offered him a cash discount. So that is called as immediate payment. What is early payment? You want to get the money from that person before the due date of the payment. Due date is after 2 months. You want to get the money within 10 days, 15 days, 1 month, or just before the due date. So you call that as early payment. To induce early payment, you give cash discount. Or prompt payment means what? You agreed a due date. On that due date, you want him to pay the money. For that, you are giving a discount. Because this person has got a background that whenever a due date is committed, on that day does not make the payment. So to ensure that this person makes the payment on due date, you are offering him a cash discount. So to make the prompt payment. Prompt payment means what? The payment to be done on the agreed date. That is called as prompt payment. So to induce these kind of payments, you offer a special discount called as cash discount. Now this cash discount, you are not giving out of love and affection. It is a compulsion that you're giving with. So when you're giving this cash discount, your emotion is not good. You're not happily giving this. You're giving out of pain. So that pain needs to be emoted in the financial statement. So cash discount will be separately captured in the books of accounts. Cash discount is separately captured in the books of accounts. Trade discount will never be recorded anywhere in the books of accounts. But cash discount has to be captured in your books of accounts. So when the seller is allowing the discount, for him it is discount allowed. So for him it is a loss. And the person who's receiving the discount, for him discount received, it is a gain for him. When I allow the discount, I will debit the discount allowed in my books. When I'm receiving the discount, for me it is a gain. Credit all income and gain. So discount received will be credited in my books. So every single time when you record an entry, you have to conceptually understand what you're doing and apply the mind there. Don't buy at the entries. Then we learned something called as rebate. Rebate means what? Again, this is a discount allowed by the buyer to the seller for a reason other than trade discount reason, other than cash discount reason. For trade discount, what reason? Bulk purchase. For cash discount, immediate payment, early payment, prompt payment. Except these reasons, if there are any other reason, the discount what you give is called as rebate. Any problem? The accounting treatment for the rebate is same like your cash discount allowed and cash discount received. The accounting treatment is exactly the same. Example, what we saw was you ordered something, but you got poor quality of the product, or you got the goods not as per your specifications, right? So these are the reasons why the rebate has been allowed. Then we discussed the scenarios where the purchases are reversed. So we agreed that expenses incurred towards purchase of the goods. Whenever I'm buying goods, goods means what? I'm buying the goods with intention to sell. That is called as goods. So when I'm purchasing the goods, I'm incurring expenses towards it. Do you agree with me? Now these expenses, where I should record? This shall be recorded in the purchase account. This shall be recorded in the purchase account. Only when such goods are purchased with the intention to be sold or resold. So if I'm spending 5,000 rupees on buying the chocolates, if I'm going to sell the chocolates, then this 5,000, which is my expense, I'm allowed to be recorded this in the purchase account. Clear this point? Now let's suppose you've recorded this in purchase account. But what happened? Instead of selling these goods, you have given these goods for different purposes. However, sometimes the goods so purchased, that 5,000 rupees of chocolates what I purchased with the intention to sell or resell are used for other purposes. What purposes? Other than being sold. Instead of selling it, I'm using that for all the other purposes. Hence, in such cases, the expenditure for the purchase of such goods, which was earlier recorded in purchase account, that 5,000 which was earlier recorded in the purchase account, now shall be reversed from the purchase account and it shall be booked or transferred to other accounts based on the type of transaction that you encounter. Are you able to follow? So now what are the different examples? Sir, goods given as charity. So that 5,000 at the time of purchases was recorded where? In purchase account. Purchase account debit to cash. So it was debited in purchase account. Now you've broken the promise. Can I keep that 5,000 in purchase account? No. I need to reverse it. To record in the purchase debit, to reverse in the purchase credit. So to purchase, I'm recording in credit. So this is nothing but reversal of purchase. This is nothing but reversal of purchase. This document printout you'll get, don't worry. Okay. And since you're reversing the expense, in place of that, somewhere I have to book the expense. No, boss. Earlier you had booked the expense in debit purchase. Now you're removing the purchase from debit and putting in credit. So in place of that, some other debit should come. No, boss. That debit will come where? Either in charity account or donation account. Now, this type of entry is called as what entry? This is called as transfer entry. You're transferring the value from one purchase account to another charity account. You're transferring from one account to another account. So this is also a type of transfer entry. Any problem? Okay. Next, I gave you the example of samples. So 5,000 worth of chocolates I purchased. So I recorded that 5,000 in the purchase account. But instead of selling it, I gave as a free sample for business promotion. So it is expenditure. Accounting is not saying that don't record as expenditure. But accounting is saying don't show that as purchase. That is not your purchase. Something will go to purchase when I'm selling that product as it is. Otherwise, it is not your purchase expense. It could be some other expense, but not purchase. So I'm now reversing that expense in purchase account and recording that expense in another account called as sample account or sales promotion expense account. Any problem in this? So this is also a transfer entry. Then we discussed goods withdrawn by the owner for personal purpose. See, always whenever the owner is withdrawing something for personal purpose, it is not necessarily only cash. If he's withdrawing cash, drawings to cash. But apart from cash, he can withdraw the goods also, no boss. He can withdraw asset also, no boss. So depending on what he's withdrawing, accordingly you have to pass the entry. So if he's withdrawing the goods, then what is the entry? Drawings account debit. Now instead of cash, it is going to be purchase because I have to reverse purchase now. 5,000 rupees worth of chocolate I recorded in the purchase account, promising that I'll sell it. But instead of selling, what I did, I consumed for my own self. So I have not fulfilled the promise. Then this 5,000 cannot remain in your purchase account. So I have to reverse the purchase account and record that in my drawings account. Why in drawings account? Because this money I have to record from the owner. Until I get the money from owner, I'll catch hold of his capital account. But here we are routing through which account? We are routing through intermediate account called as drawings account. So through drawings account, finally I'm going where? In the capital account only. Through drawings account, finally where will I reach? Capital account. Because whatever the amount is parked in the drawings account, I will transfer again where? To capital account. So what is my closing entry there or transfer entry there? Capital account debit to drawing. So drawing in credit and drawing in debit, if it is gone, ultimately what am I left with? Capital to purchase. So whatever goods he has enjoyed, the owner, until he pays the money, I'll catch hold of his capital account. Debiting the partner's capital account means I'm reducing the money that I have to pay him. So capital money means what the firm has to pay, no, the business has to pay, no. In that, what I'm supposed to pay, I'm minusing this value, what he has to pay. That is the purpose of goods withdrawn by owner for personal purpose. Any problem in this? No problem. Then, okay, till this we discussed in the last class. Okay, so whatever I've discussed now, so far is a revision done in the last class. Whatever concept is covered in the last class, I did a quick revision of that in today's class. In continuation to that, there's one more concept which I didn't discuss because we didn't have time to complete it. And this is very important point, and there could be confusions related to it. So I thought today is the best day to discuss this. So are you all ready? Can we start?
Yes, sir.
Loudly.
Yes, sir.
Now, the last scenario under the reversal of purchase concept is where the goods that you bought with intention to sell or resell now is destroyed either by accident or natural calamity or is lost by theft. The goods destroyed by fire, goods destroyed by tsunami, goods lost, theft, burglared. So whatever you say the reason. So ultimately here also you could not fulfill your promise. 5,000 worth of chocolate when I purchased, I recorded in purchase account. That time what did I promise you? This 5,000 worth of chocolate, I'll sell it. Now instead of selling it, it got destroyed or it got stolen. So did I fulfill my promise? No. So here also I need to reverse my purchases. So purchases is getting reversed here. Any problem? Wherever you break the promise, whatever be the reason, I'm not bothered about the reason. The moment you've broken the promise, if the goods are not sold, then you have to reverse the purchase. So I've reversed the purchases. I've reversed the expenses from the purchase account. In place of that, I've recorded expenses somewhere in a bus. So where will I record? There's a new account called as loss of stock account. Loss due to what? If it is destroyed by fire, loss of stock by fire, loss of stock by theft, any reason you can give. So you'll open a new account called as loss of stock account. Now, what is the nature of this account? So this is nominal account. So why this is nominal account? This 5,000 worth of goods, though it does not qualify to be recorded as purchase expenses, but this money I have lost no was. If it is destroyed by fire, goods is gone forever. My money is lost. It is my loss. So nominal account says what? Debit all expenses losses. Business allows us to record our losses. Expenses should not be recorded in purchase. That is only condition. They never said that expenses should never be recorded. In the business only goods got stolen, no boss. In the business only goods got destroyed by fire, no boss. In that case, I should record that expenditure where? In the business only, no. But not in purchase account. It should be in some other account called as loss of stock by fire account. Any problem in this? So loss of goods by fire, goods destroyed by fire account, whatever you say, two purchases. So I'm recording the loss, I'm creating the loss, and I'm reversing the purchases. Any problem in this? Easy. Now your life is going to get screwed up. Goods destroyed by fire or goods stolen can be protected against insurance. My first question before that, what is the meaning of insurance according to you? What is the meaning and purpose of insurance? What is the purpose of insurance? Why insurance companies are existing? To cover the? Okay, wonderful. To cover the loss. Any other thing that you can tell me? What is the sole purpose or existence of the insurance company? Why are they here? What are they trying to do us? I mean, what are they trying to do to us? Protection against risk. Rightly said. PROTECTI1. Correct? Protection against risk. We are surrounded by multiple type of risk. So insurance company has sensed an opportunity in this risk, and they try to cover this risk, telling as if they are going to protect us, and they have made a huge business out of it. In Tamil we say no, bayathoda business. In Hindi we say dar ka business. The moment you step outside on the road, you're walking, suddenly come, zurr, car comes and hits and goes. You will die. You're sitting in the class, let's not take our example. Somebody sitting in office, didn't heart attack, gone. Office, short circuit, asset, goods destroyed by fire. So all this kind of risk, the insurance company will come and put on your plate. If you do this, this will happen. Here, this is the risk. That is the risk. So now what happens? When you know that so much of the risk is surrounding us, you will want somebody to come and protect us. That is when you go under the. Wait, Anjali is not able to log in, is it? That's when you reach to insurance company to seek help protection. Now let us give some example for risk. There's something called as health insurance. There's something called as health insurance. What is the meaning of health insurance? Today, every human being invariably at some point of the time is encountering some health issues, significant health issues. So when you go to doctors, hospitals, for getting the this thing treated, getting the problem treated, the expenses are very high. Sometimes the bill runs in several lakhs. Correct? So these are those days where even if you go to a doctor saying that, look, boss, I have a viral fever last 5 days. So back then in those days, what they used to do, they used to give medicine and leave it. Nowadays, out of 10 cases, at least 2 cases, what they do, they make them admit in the hospital. Sir, you have to put IV or weakness will come. This will happen. That will happen. So today, in most of the cases, not in all cases, but in most of the cases, this has become a huge business. Hospital has become a huge business. Now, imagine the plight of people who are earning, let's say, 25,000 to 30,000 a month. For them, all of a sudden, if you encounter them with a huge bill, medical bill of 3 lakh rupees all of a sudden, or 5 lakh rupees all of a sudden, for them it is very difficult. A person who is earning 25,000 a month or 30,000 a month, all of a sudden, you go to hospital to, treat your problem or illness, and the doctor or the hospital says you have to pay 5 lakh rupees for that. How will he feel? Correct. So don't you think this is a risk here? The risk of losing the money. The risk of losing the money, from nowhere you got a problem and the problem was encountered, you have to go for a treatment and suddenly you have to pay a bill of 5 lakh rupees. Don't you think there's a risk of the money getting lost? Correct? It's as good as money getting lost only. So now insurance company have sensed an opportunity here, telling that, look, boss, whenever you're encountering any medical expenses, we will cover those expenses. Whatever will be the bill, we will take care of the bill. You don't pay it. But for the guarantee that I'm giving to you, for this risk of yours, what I am taking, you have to pay me an yearly amount called as insurance premium. Insurance premium. So you'll have to pay insurance premium every year. Let's say 25,000 rupees, example I'm telling, per month. Sorry, per year. Per year, 25,000 rupees you have to pay. 25,000 per year I'm telling. So like that, you keep on paying every year. So one fine day, let's say after 3 years, you've paid this money for 3 years. So how much money you spent totally? 75,000 you spent. At the end of the 3rd year, there is an hospital claim. Now you got a claim for almost 2.5 lakh rupees. This money who will pay now? If the insurance was not there, you will pay. Now the insurance is there. This 2.5 lakh rupees who will pay? Insurance company will pay. So how much are you benefited by? How much are you benefited by? 1 lakh? Was your CA people? You can't take so much time to calculate. 1.75 lakh you're benefited. So insurance at times is beneficial or not? Yes. There could be a flip side also. You did a lot of yoga. You had a lot of healthy foods. You didn't go and you didn't go out and have the junk foods. So nothing happened to you. Correct? No? 25,000 you paid for 10 years. 2.5 lakh rupees you paid to insurance company. Not even once also insurance claim came. So whatever money you have paid is a total waste. So these days, people who apply for insurance, they pray, God, at least once in a year, make me sick, make me get admitted to hospital. Not because I want to suffer. It's because I paid so much money to insurance company. I have to recover that money from that fellow. I want to benefit out of it. So please admit. And why do you think out of 10 cases, 2 or 3 cases, people admit them in the hospital? So doctor asks, look, boss, your condition is little bit up and down. If you go home, I can give medicine. If you want, you can go home. But suddenly something happens that we cannot take care of. But if you're here, we can monitor you well. When this question, doctor is saying, we think, oh, we can admit 2-3 days relaxation, AC room will get. Money will be paid by insurance company. Whatever extra fees is there, everything insurance company will be taking care of. 3 days only, no doctor. Admit, no problem. This is the attitude of people now. Changed. Earlier those days, we have to pay money from our pocket. So whatever be the risk, we'll take care of it. No problem. Doctor, you gave me medicine. I'll go home and manage. I'll take care of myself. You just give me the medicine that is required essentially to get all right. Nowadays, the game is ulta. First attitude is what? The money that I pay to insurance company that I have to recover. So here the opportunities for us also to recover the premium that we have paid. And this is an earning opportunity for whom? Again, hospitals and doctors. They can give multiple bills. Extra bill. I'm able to follow. So basically, this premium is paid to the insurance company by you so that the insurance company can protect you from the risk that you're exposed in the market. So one such risk is health risk, where the medical bill, health insurance, nothing but medical insurance, where the heavy medical bills comes, no, to protect you from the risk of heavy medical bills. This concept of health insurance come into picture. Similarly, in business also there are multiple types of risk. The risk that the goods can be destroyed by fire. The risk that the goods can be destroyed by fire. Imagine in your godown you have 1 crore worth of goods. So by chance, if there's a short circuit and there's a fire, entire 1 crore worth of goods, swaha. Correct? No. So what happened? Imagine 1 crore worth of goods. This is good enough to ensure that your business is done and dusted. Done and dusted. 1 crore worth of goods. What will you do? Huge capital in the inventory. Gone. Isn't it a huge risk? Very huge risk. Now, insurance company has sensed an opportunity here. They say that, look, company, the goods, stocks, and assets what you have in your business are subject to risk. What type of risk? Risk of fire. Risk of being stolen. Since you're located near beach, anytime tsunami can come and hit your godown, shop. Your goods can be destroyed. Your assets can be destroyed. So now don't take risk. We will take risk for you. You give us yearly insurance premium. We will take care of your risk. That is how people go and take the insurance for the protection from the various risks for the stocks as well as the assets. Am I loud and clear? Now, please tell me, people, if I come to the same concept, these goods were destroyed by fire. Let's say the goods are worth 1 lakh rupees. So this 1 lakh worth of goods, when you purchased, where did you originally record? In the purchase account. Promising what you will sell it. Now, did you fulfill a promise? No. It got destroyed by fire, so you could not fulfill the promise. So can I let that 1 lakh be in the purchase account? No. So I have to reverse it by giving a credit. To record the purchase in the purchase account, you debit it. To cancel it or reverse it, I have to give a credit. So in place of that, where will you debit? You will debit in the loss of stock by fire account to purchase account. Now, this entry, when will you pass? This entry will pass on the date of fire. On the date of fire, when the accident takes place. When the theft takes place, whenever the accident takes place, on that date you will record the loss. Because on that day, insurance company will not come and tell you 100% will give you the money or not. So that day you don't know whether money will come or not. So adopting prudence concept, we record the loss in the entire book. What is prudence concept? Prudence concept says that record all your anticipated losses. Today, since I have no confirmation from the insurance company, I'm believing that this money will not come to me. So accountant on the date of fire, on the date of accident, on the date of theft, what will he do? He will record the entire 1 lakh rupees in the loss account. Tell me, okay or not okay? Now, the very same day, as and when the accident takes place, within couple of minutes or hours, you have to reach out to the insurance company, telling that this incident has taken place. Please come and do the inspection. Because he will come and check whether the fire, which was set in the godown, was by mistake or on purpose. You might be wondering, sir, on purpose, who will set the goods on fire? Yes. There are certain products which is time based. Means what? They have expiry. So imagine there are certain products which is about to be expired in next 1 month. 1 lakh worth of stock is there in the godown which is near to expiry. So if this is expired, once the product is expired, we'll get 0 rupees for the stock. Nothing will get. On the other hand, if I set the entire stock on fire, boom. If I set the entire stock on fire, don't give me entire 1 lakh rupees. At least give me 60,000, no? If I don't get entire 1 lakh from the insurance company, at least I'll get 60,000. No. Getting 60,000 is better than getting zero. So there are cases where people set the stock on fire on purpose. So then at least if the goods are not sold and money cannot be recovered from the customer, at least we can recover the money from insurance company. Like that, people criminally also think. So insurance company, the day the goods are set on fire or stolen, they will not come and give you 1 lakh goods destroyed. No problem. Come and take 1 lakh. He will not give you all that. He will come and do a thorough inspection. He will do a thorough inspection whether the goods were destroyed by the fire. The fire you have put it or it happened accidentally. So they will do the investigation. So investigation will go for 1 day, 2 day, 3 day, 4 day. We don't know. But technically, on the date of accident, boss, we were assuming that this money will not come to us because we take a conservative view. When we do accounting, no, as an accountant, as a chart accountant, we take a conservative view. So we adopt the prudence concept. Though the business owner is optimistic, that's why he set the goods on fire. No? He knows that money will come. If not 1 lakh, at least 60, 70,000. But when accounting, we don't take that way. We take a conservative view. Means what? We will think that money will not come to us. So on the first day of the fire, what do? We record the entire 1 lakh as a loss. Any problem? No problem. Now what happens? After 1 week, after all the survey has been done, inspection has been done, they check everything. Okay, fire is done genuinely. It's not on purpose done by the owner. It is by mistake and accident. Now they will send an email to you telling that, okay, we are processing your claim, but not 1 lakh rupees. We will give you a claim of 80,000 rupees. They have their own calculation why to give 80,000, why to give 70,000, and when they can give full 1 lakh, they have their own calculation. Let's not get into it. Now, my concern is they are giving us a claim of 80,000. Now, on the date of claim confirmation, when we receive the confirmation of claim email from the insurance company, that time what will you do? You'll take a deep breath. Thank God. Where I was recording the entire 1 lakh as loss, against how much I'm going to receive? 80,000 I'll receive. So that 80,000 what I receive, is it my loss? No. So in this 1 lakh rupees, 80,000 rupees loss actually is not a loss. So can I say I have to reverse that loss? To create loss, debit. To increase loss, debit. To decrease loss, credit. So to loss of stock, 80,000 I'm reversing it. Any problem? And this loss, why I'm reversing? Because this money I'll get from insurance company. When? In future. Anything that I get in future is asset. Asset is what balance? Debit balance. To create asset, debit. So 80,000 debit. Insurance company to loss of stock by fire. Okay, wow. Now, let's come to your golden rule. Loss of stock by fire, you debited here. Telling what? Sir, this is a nominal account. What does nominal account says? Debit all expense and losses. Debit all expense and losses. Now, loss of stock by fire, you reversed. Credit all income and gain. Credit all income and gain. What is income and what is gain here? Sir, 80,000 rupees, what is giving us income and gain only? No, sir. What is the actual meaning of income and gain? Income and gain. When does income and gain happens? When I sell goods, I make profit out of it. Income, I can say. When I sell the asset at profit, I say I am gaining. So gaining and income is different. The loss what you've recorded, reversing that loss is different. Are you able to get a minute difference between the both? When will I say that I'm, in gaining something or I have income? When something I've earned out of my own hard work and effort, that is income and gain. You have voluntarily recorded one loss. You have voluntarily recorded one loss, and that loss you are reversing, telling that this is a gain for you. Can you able to justify that point? See, justify, we can justify any way we want to justify. But there's a thin difference between income gain. Now, this loss of stock, what has been credited, is it your income actually? Is it your actual gain, which you have put an effort to get out of it? No. I'm able to follow. So now, modern rule is the best rule that is applied. So what is the rule here? So to increase loss, to increase the loss, I gave a debit. To decrease the loss or to reverse the loss, rather the right word is what? To reverse the loss, it is credit. Am I loud and clear? Any problem here? So how much loss is originally recorded? 1 lakh was recorded. Out of the how much is reversed now? 80,000. How much loss is still existing in the loss account? 20,000 is the pure loss existing in the loss account. Okay. Now the first entry you recorded on what date? On date of accident. Whatever is the accident, on the date of accident. Second entry you recorded when? On the date of claim confirmation. On the date of claim confirmation. When the claim was confirmed by the insurance company, that time you reverse the loss and you expected or expecting this money to be received from the insurance company in the future. Now what happens? The insurance company is paid the money. So on the date of payment, when the debtor gives you the money, what is entry? Bank to debtor. Bank to debtor. What is your entry for credit sales? Debtor to sales. So debtor you debited. When the money is received, what will you do? Close it, reverse it. So bank account debit to insurance company. How much? 80,000, 80,000. Any problem? No problem. Remaining 20,000 which is there in the loss of stock account that you have to transfer to P&L account by passing a closing entry. Now, what is the closing entry? I have not discussed with you yet. When the right time comes, I'll discuss the closing entry. So basically, whatever the amount is there in the loss account, which is 20,000, this 20,000 is transferred to your P&L account. In the P&L account, which side? Debit side. To loss of stock, how much? 20,000. Now, what is the meaning of this entry? What is the purpose of this entry? Why the closing entry has been coming? Why do you call, first of all, this as a closing entry? That concept I have not yet discussed with you. But why did I write this entry? Because this entry is coming in a flow. So tomorrow, whenever you revise, I have to record everything in flow novas. You have to study in flow novas. For that, I wrote the entry here. But otherwise, this part I have not yet discussed with you. Except this, the above three entries, what we discussed. In this, if you have any doubts, please ask me now. In this, if you have any doubts, please ask me now. First entry is clear. No doubts. Open your mouth and say. No doubts. Now, these three entries are possible only when the goods which is destroyed by accident, against it we have an insurance claim. Now, when insurance claim is not there, then what happened? Only one entry will come, which is the first entry. So, insurance claim is there. Only when the insurance claim is available, next two entry will come into picture. Any problem? Any issues? No difficulty? Okay. I'm doing this question number 12 from a TS Rival book to cover all the concepts that we discussed so far. It says that journalize the following transactions. Cash withdrawn by the proprietor for personal use, 2,000 rupees. What entry? Drawings account debit to cash. Anything that the owner is withdrawing for the personal purpose, it will be routed through drawing account. So initially routed through drawing account. Eventually the amount in the drawing account is finally transferred to your capital account by passing what entry? Transfer entry. Wonderful. So drawings account debit to cash. You can take this as homework. I'm not doing the entries properly. Take this as homework, but I'll discuss with you now. But this question, go home with proper format. I want you to try by your own self. Now, if I discuss more than sufficient, okay, to save time. Online people, any problem with the first entry, please? Any problem with the first entry?
No, sir.
No, sir.
No problem. Now, the first point says cash withdrawn for personal use. Like that, can I withdraw goods also? Yes. Can I withdraw asset also? Yes. These three could be withdrawn. What and all? Cash, goods, asset. Means asset other than cash and goods. Other assets. So here goods purchased for 5,000. Goods which are originally purchased for 5,000 were taken by the owner for personal use. So please tell me when the goods was purchased originally, you recorded the 5,000 in which account? Purchase account. What is the account? What is the entry? Purchase account? Debtor you said? No, debit only. Okay. Purchase account debit to cash, bank or creditor. I don't know what type of transaction. So 5,000 in the purchase account. I allowed you to record this 5,000 in purchase account on what condition? The condition that is 5,000 worth of goods should be either sold or resold. But now what happened? You broke the promise. In that case, do you deserve to keep this 5,000 in the purchase account? Can I call that 5,000 as purchase? No. So now I have to cancel purchase by giving a credit. To create purchase, to increase expense debit, to decrease expense or reverse expense it is credit. So to purchase, how much? 5,000. Debit what? Drawings account debit to purchase. This is the entry. Any problem here? Drawings account debit to purchase. Online people, any problem with this entry, please? No problem. Online people, please open your mouth and respond.
No, sir.
Anjana, Darshini, Anjali, Barni, Gautam, Krish, Hema, Niyasha, Riya, Yashaswini, Krish. Any doubts, please?
No, sir.
No, sir.
See, this question or this type of questions will not come as a standalone question in your foundation exam. But this will be mixed with your final accounts question. Are you able to follow? You are not Amul baby to get this question like this. So they'll mix you in the big complicated questions. So that time, 80% of the question you'll be able to solve. But 20%, these type of questions you will struggle. So to ensure that you have a strong base there, if you do not have any difficulty there, I'm teaching all this like proper with base. So please respond if I'm not, sorry, if I'm not clear in my explanation or if you have not understood. Third point, paid 5,000 as life insurance premium for the proprietor. First room, left. Paid 5,000 as life insurance premium. Now, please tell me, I've discussed two types of insurance with all of you. One was health insurance. Health insurance is to protect against the heavy medical bills. We call this as mediclaim insurance also. Health insurance also called as medical insurance also. Okay. Then we discuss the risk that is associated in the business. Risk for theft, fire, etc. etc. Business related insurance. Now there's something called as life insurance premium. What is the meaning of life insurance? Health insurance is to protect us from the health. Health means what? Against the heavy medical expenses. Now I'm talking about life insurance. Life insurance. What is the meaning of life insurance? Correct, no? Risk of death. Imagine there is a family where there is one main earning member, father, mother who is a housewife, and two kids. The main earning member of the family, the father, dies. What will be the plight of the remaining three people? Can you even imagine? It's going to be very painful because there are heavy expenditures that a parent have to incur to ensure that the child is growing, comfortably. And especially if you want your child to be educated, then your pain, your suffering is even more higher. Right? Now imagine if the main breadwinner of the family passes away, then what happens? Gone. It's a huge risk, no? So here the insurance company have sensed an opportunity and they said that, look, boss, we want to protect you against from this risk. So if you feel that in your family, you're the only breadwinner of the family, and if you feel that you might, meet with any of these, uncertain deaths, in that case, you can always take a protection against that risk. So hence the insurance called as life insurance is being offered. So life insurance is basically given to cover the risk of uncertain deaths. Uncertain deaths. Are you able to follow? Uncertain death means what? Untimely death. So to protect the family against the untimely death, which the family is otherwise going to suffer, to protect from that suffering, this life insurance has been offered. So please tell me, if the main breadwinner of the family, if the father dies, the ultimate benefit of this insurance will go to whom? The remaining family members, to the remaining family members. So now, please tell me, is this a premium that is happening in the course of business? Is it a business related expenditure? It could have been a business related expenditure had the insurance premium benefit in future is coming to the business. Business is saying that if you take the life insurance premium and if the ultimate sum insured, that main amount 1 crore, 2 crore rupees is coming to the business, then I will record this 5,000 rupees as business expenditure. Now, here have they told that this money is going to come to the business? No, because life insurance premium, normally the nature of policy is that it goes to the nominee of the family members. Means what? It goes to family members. That is how the concept is. We have something called as key man insurance policy. In key man insurance policy, if the business owner dies, then the money comes to the business. So money paid against the key man insurance policy. Key man means what? He's the key person to run the business. So there's something called as key man insurance policy. Then that premium what you pay is business expenditure, and the money is come to whom? Business. So premium paid for key man insurance policy, that goes to your business expenditure. But normally when I talk about life insurance premium, this money, the ultimate money that comes upon the death of the owner or the death of the father, it goes to whom? The family members. So this 5,000 is paid from the business, paid from the business. So money is going out to bank. Money is going out to bank. But can I record that as insurance premium expense of the business? No, it is owner's personal expenditure. So what should I debit here? Drawings. So drawings account debit 5,000 to bank 5,000. Are you able to follow? Had this been an key man insurance policy, then the premium would have been paid by the business. No, I will call that as key man insurance premium expenses account debit because it is business expenditure. Because ultimately benefit is coming to whom? The business. So here the people will pay a normal amount of, let's say, 25,000 per annum, 50,000 per annum, or 1 lakh also per annum. They're different policy. The more amount you pay, the policy value will be highest. So policy value means what? When the event is triggered, when the death happens, you will get the matured value, the sum insured. It is called as sum insured. That could be 1 crore, 2 crore, 3 crore, depending on your policy value that you have taken. There are multiple types of policy. So ultimately, this 2 crore, 3 crore is going to whom? The family members. So then when the benefit is gone to the family members, then expenditure also should be of the owner. It should not be of the business. Hence, this 5,000 has been routed through the drawings. Means ultimately this 5,000 I deduct from the capital. If I don't get money back from the owner, I will deduct this from the owner's capital. Any problem here? Online people, any problem here?
No, sir.
So drawings account debit to cash account, life insurance premium paid. Is the logic clear why it is gone? It is in the drawings account and not in expenditure account. Is the logic clear to all of you? Okay. Next, goods uninsured means in my business I have stock, but those stocks are not insured, and these goods are worth 3,000 purchase cost, but destroyed by fire. So when the goods were purchased, these 3,000 where did you record? In the purchase account, promising to sell. Did you fulfill your promise? No. Now, can this 3,000 be in the purchase account? No. So to reverse the purchase by giving a credit in place of the debit, loss of goods by fire or goods destroyed by fire. Anything you can open the account. Goods destroyed by fire account debit to purchase account. Loss of stock by fire or goods destroyed by fire account debit to purchase account 3,000. Any problem? Now, fifth one, goods costing 1,000, damaged by fire. Insurance claim accepted 800. Check is also received from the insurance company. So can I see we're talking about those goods which is protected against the insurance? Okay, now goods costing 1,000. Guys, when you purchase the goods, in our previous example, 5,000 you take or 3,000. What are these? Can I say purchase cost? So you record the amount in the purchase account debit. What do you record? Cost only, no, bus. So when I reverse the purchase account, what you should record? Again, cost. So can I say goods costing 1,000 means purchase value 1,000, which was recorded in purchase account. Now it is destroyed by fire. So the goods was originally purchased before the goods were destroyed in fire. That time what entry did you pass? Purchase account debit to cash, bank or creditor, whatever it is. 1,000. Now what has happened? There's a fire happened. So on the date of fire, you are taking a conservative view. So as per the prudence concept, record for all your anticipated losses. So how much loss you're anticipating? On the date of accident, full loss you anticipate. So what is the entry going to be? Loss of stock or goods by fire account debit to purchase 1,000. Okay. So on that day, you would have made a call. The insurance company team will come. They'll do their inquiry, assessment, whatever survey they want to do, they will do it. They'll go back after all the assessment is done. They will generate a report. And based on that report, the insurance claim team, separate team will be there. They will tell, okay, sir, we are going to process your claim to the extent of 800 rupees. So some days later, you got to know that 800 rupees is the claim amount. So date of claim confirmation. On that day, you got to know that out of 1,000 rupees, how much are you going to receive? 800. So to that extent, 800 is not your loss. No? But you have booked the entire 1,000 as loss. In this, 800 is not your loss. To reverse the loss, what am I supposed to do? Credit. To create loss, you debit it. To reverse loss, credit. So to loss, I'm doing. To loss account, how much? 800. In place of that, what should I debit? Insurance company account debit 800. Any problem? When the insurance company makes the payment, please understand, no insurance company is going to give you the claim confirmation and the payment on the same day. Claim confirmation is given by the claim department. Then this is processed further. Then finally, the payment is done by the payment processing department. These are the multiple steps. Guys, in any company, just like that, one person cannot make a decision. Oh, today I'll go and do the survey. I'll itself give the claim confirmation. I'll itself make the payment from the bank. Boss, not possible. Entire business is driven through the process. It takes time. So if the claim is coming on one day, obviously the payment will come on some other day only. So both are happening in two different dates. So this is a separate transaction. This is a separate evented transaction. This is a separate evented transaction. So payment is coming on a separate date. So when the payment is received from the insurance company, what is entry? Bank account debit to insurance company 800. Any problem? Now these three entries is what you have to pass always. In your textbook, this textbook or some other textbook, they might have twisted the entries here and there. Don't confuse so much, because accounting, you can do in multiple ways. There's no standard rule that this is how you have to do it. 99% they have laid down the standard. 1% deviation is possible, I'm telling you. I'll be able to follow. Sometime I might decide that I may not debit the insurance company unless and until get the money. So some people, what they do, no, they will pass the second entry and third entry combined. So what is my first entry? Loss account debit to purchase. How much? 1000, 1000. Okay. Now, on the date of insurance claim being confirmed, that time the person will not reverse the loss. He will say, unless money comes to me, I will not reverse the entry. Like that, I can take a start. In that case, I'll not pass the second and third entry separately. I'll pass it together. So that time, what will I do? Bank account debit. How much? 800. On that day when I receive the money, that time only I'll reverse the loss. So two loss, how much? 800. This is also one methodology, no, boss. Can you say this is wrong? No. So in accounting, we are doing multiple ways. So depending on what is the information given in the question and language, you have to follow accordingly. Otherwise, if nothing is mentioned in the question, I would suggest you to follow these three steps. Because normally, all this three event happens on a different date. Transactions take place on different date, and hence it has to be recorded separately as when the transaction takes place. Am I loud and clear? Any problem in this part? Online people, any problem in this part?
No, sir.
So
No,
this,
sir.
in this particular entry, they have done it in different manner. This is also allowed. What they have done and what we have done both are same, but they have complicated a bit. What they have done, loss to purchase means they recorded the loss, reverse the purchases. And then when insurance company confirmed the claim amount, they are debiting 1000. Donkey fellow, why are you debiting 1000? When the person is saying that I'll pay you 800 only, will you debit insurance company by 1000? When the person is going to tell you that I'm going to pay only 800 rupees, will you have an expectation from him to get 1000 rupees? This is not even allowed. This is not even recorded. So what have they done? Full 1000 rupees they're debiting in the insurance company, and full 1000 rupees loss they're reversing it. And on the day when the money is received, what are they doing? Bank account debit 800, remaining 200 is not coming. No, again they're recreating the loss account, which means what? They created the loss account once here. They closed the loss account here. Again, they have reopened the loss account here. What a donkey fellow. Khichdi like is going again, and again. Donkey fellow. So bank account debit 800, loss of stock by 200, to insurance company 1000 rupees. Now you understood why I did this method. This is simple method, easy method. So nothing is mentioned, means if the same ditto question comes, go with these three steps, your game will be over. And this is more logical and understandable. And in the same textbook, when you come to the final accounts topic, the same question is there also. There they have solved in this way what I've done on the whiteboard. So we have a dialogue, no? So same way, accounting can be done in multiple ways. You stick on to one way, which is logical. Any problem in this? Online people, any problem in this?
No, sir.
Okay. Now, goods costing 500 was given as charity. Sale price is 600. So will I take 500 or 600? I'll take 500 because what value did I record in the purchase account? Cost price. So cost price is how much? 500. So reverse the purchase by giving a credit. So to purchase. In place of the debit, what? Charity. Charity account debit to purchase account. Charity to purchase. Sanjay, what happened? Charity donation to purchase. Last one. This is not required. This I have not discussed with you. Leave it. Or we can discuss, not a big deal. You've done 12th now. You guys are pro in accounting anyways. Now, sold household furniture for 5000. Sold household furniture. Household means what? Personal furniture, 5000. Proceeds means what? The money received out of it is called as proceeds. The money that we receive out of it called as proceeds. That proceeds were invested in business. What is it? This is nothing but 5000 rupees is the amount introduced as capital. Normally, we can say no, 5000 rupees this fellow had gave as capital. But they're telling that source of how this 5000 came. They're telling that this person did not have money. So he wanted to go and sell his furniture. He sold his furniture, got money out of it. Then he gave that money to the business. Do I need his personal drama? In the business, do I need the drama? No, I need money. How much money came? 5000. From whom it came? Owner. That's all. So what is the entry? Cash to capital. Game over. This furniture and all only to confuse us. This is not business furniture where I should be bothered about. This is which furniture? This is household furniture. My WhatsApp is on, is it? That is why it is hanging. Cash to capital. Any problem? Wonderful. Now, all the other questions, including this, all the other questions of your journal topic, homework, to be completed by when? Before coming to next class. Because all this while you're sitting vetty only at home, nothing is there. So, aram se we can finish it off. To be very honest, there is no explanation of all this anywhere in your ICA book. Directly sums are there. Because we believe that whoever is coming in foundation, they have all this knowledge which is essentially required. But at heart, we know that we have not been exposed to all this in school. That's why I'm doing a recap of all that so that when you're doing the practical question, you become a little bit easy and comfortable. You'll not believe there are few people who came to me at inter level or at final level from some other academies. Still, now if I ask them the basic questions, why this, why this, why this, they are not able to answer. And these are those people who have completed foundation. Few people completed inter group one also. Few people completed inter also. Few people completed final also. Still, people don't know the concept. Like that, if you become a CA, what CA you become? Even by not explaining all of them in deep depth, if I just explain at superficial level, I'm telling you still I can make you pass CA formation. But there's no fun in that. No? Tomorrow, when somebody is asking you the question, you should be in position to explain. So as a teacher, I feel that I really win when you are also able to explain in the same manner to some other person like how I'm explaining to you. So that is the kind of transformation I want to give. Because as a CA in the market, you should guide people well. Imagine, no, all of you are not CA as of now. You have no idea about what is income tax. You have no idea what is GST. You have no idea about advanced level accounting. You come to me as a chart accountant, to the chart accountant, asking help, said this filing I have to do, this filing I have to do, this company I want to start. Should I go with private company? Should I go with public company? Should I go with partnership? Should I go with sole proprietorship or not? Like that, they'll come and ask, you will come and ask. So there, as a teacher, as a mentor, as a guide, if I don't teach well, if I don't tell you properly, see, if you do sole proprietorship business, this is advantage, this is disadvantage. If you do company, this is the advantage and this is disadvantage. How will you know what decision making have to be done? There are so many CAs, I'll tell you, when the client approaches, no, they don't give any information. Just do what I'm saying, all of them. See, ultimately, the client will do what you say. But if you explain the client why this is to be done, they'll get one satisfaction. No? Okay, I'm going to my CAs giving me such a good explanation. So first of all, that you have to have heart. Second, you have to yourself have first knowledge. A lot of people don't have much knowledge, but they're sitting and doing practice. What is the point? So as a student, it is important that clearing CA is the first priority. But equally important is what? To understand whatever you're learning, be it accounting, be it law, be it taxation, be it auditing. To understand the essence of the subject, no. Tomorrow, when you go and preach that in market, you'll be able to talk about the subject in full confidence. That is the kind of mindset I'm trying to develop. Otherwise, passing the chiller exam is nothing I'm telling you. Understood now? No energy. See?
Yes, sir.
Now comes the most important point, which is basis of accounting. Any business entity or enterprise who wants to do accounting, you can do accounting either on cash basis or you can do accounting on accrual basis. Accrual basis is also called as mercantile basis of accounting. 90% of the business are forced by some way or the other to do accounting as per accrual basis. 10% are the scenarios where you're allowed to do the accounting on the cash basis. 90%, whether you like it or don't like it, in some way or the other, they'll try to convince you or force you, knowingly or unknowingly, to do accounting on accrual basis. Remaining 10% are those entities where there are no much pressure and they can do the accounting on cash basis. Sir, what is the meaning of accounting on cash basis? Transaction under cash basis are recorded in the books of accounts. Means transactions are recorded in the books of accounts upon cash being received and paid. In other words, income is recorded only. That is, income is recorded in the books only at that time. Which time? When the cash is received. If money received, I'll record income. Otherwise, not. Whereas expenses are recorded only at the time when cash is paid. So money paid, expense. Otherwise, not. This is called as accounting on cash basis. Any problem? Online people, any problem in this? Online people, any problem in this? No. If you are doing accounting on cash basis, the difference between income and expense, the difference between income and expenses will represent the profit and loss. Which profit and loss? Cash profit and cash loss. So 100 rupees I record as income when I receive the money. So cash in hand, how much? 100. In that 80 rupees I have paid. That is when I record my expense. So 80 rupees has gone out. How much is the balance money in hand? 20 rupees is money in hand. So what is your profit? 20 rupees. So in this case, always your cash in hand will be equal to your profit. Always cash in hand will be equal to your profit. If you're accounting on what basis? On cash basis. Any problem in this? Any problem in this? What happened? No doubt. Now, let's discuss about accrual basis of accounting. Under this concept, they say that transactions shall be recorded in the books of accounts, or transactions are to be recorded in the books of accounts when entered, irrespective of whether the cash is received, paid or not. Irrespective of whether cash is received or not, irrespective of whether the cash is paid or not. Record when it is entered. Now, what is the meaning of entered? You have to understand. In other words, income is recorded only at that time when it is earned. So, what is the criteria for recording the income on accrual basis? Earning is the criteria. If I earn the income, I can record. In cash basis of accounting, what is the basis for recording the income? What is the criteria? The criteria is that money should be received. So there is criteria is receiving criteria. The criteria there is receiving criteria. Here it is earning criteria. Now, what is the meaning of income earned? I went to discuss. Hence, expenses are recorded only at that time. Which time? When the expenses are incurred. So what is the criteria for recording expenses here? Incurring is the criteria. Under cash basis, paying is the criteria. For cash basis, receiving money is the criteria to record income. In accrual basis, earning the income is the criteria to record your income. In cash basis, what is the criteria to record your expenses? Paying is the criteria to record your expenses. In your accrual basis, incurring is a criteria to record your expenses. Now, your doubt will be, sir, what is the meaning of income earned? What is the meaning of expense incurred? Yes or no? Only one person is saying yes. You take it from me separately. Kana? Others, no need, no, you can manage. Hello? One more time. You might be concerned now, what is the meaning of income earned and what is expense incurred? You want to know or not know? Yes, sir. Want to know. Okay. Any enterprise who wants to do business has to be a form of or has to be a part of industries. So in our country, there are how many broad classification of industry? 3 broad classification of industry, 3 types of industry. One is manufacturing industry, trading industry, and service industry. Manufacturing industry, what do they do? So they do manufacturing. What is the meaning of manufacturing? So manufacturing is a process where the business enterprise, collects all the raw material. They will collect all the raw material, and all this raw material together are put or made to go through a process. They are put through a process. And once the process is over, at the end of the process, a new product is emerged with new identity, new quality, new character, which has got its own usage, which is very much different from the usage of the raw material. So if I want to, let's say, bake a cake, so final product of the baking stage, final stage of the baking process is what? Cake. What is the first stage? Primary stage, raw material stage was collecting all the ingredients. Now, there are multiple types of ingredients. What are the ingredients for baking a cake? It's called wheat flour. It's wheat flour. Then baking soda, baking powder, sugar. Tell you guys, pro in that, huh? Vanilla essence. I like orange essence. Then one more thing, orange zest. To get that orange flavor, they take. No, the chef is smiling there. There's something called as orange zest. So what they do, they take one orange. And what is that called as, chef? Where you grind? Grater. Sorry. They have grater or grater? Grater. Correct? G, grater. Some whatever, G or C, you can decide. So they'll take a grater and zig. What is this called as? Grating. The chef knows it well. It's called as grating process. And that gives a nice flavor. Better than the orange essence. Correct? Yes. So that also you add. Very important. Milkmaid. Very important. Milkmaid. So all this are condensed milk. Oh, see people. Milkmaid we don't call it. We call it condensed milk. Yes. So all these are called as raw material. Individually, these are called as raw material having its own feature. Condensed milk, wheat flour has got its own identity, own purpose and consumption. But when I put them together, they become a batter. Batter has got its own consumption. And if I put that batter into a process, baking process, at the end of the baking process, what do you get? Cake. Now, the identity of the cake is very different from its raw materials. It's got its own consumption, purpose, and usage. So this is manufacturing process where you buy one product, put them through process, you get some other product at the end. This entire process is called as what? Manufacturing process. What is trading industry? Trading industry does nothing. Buy goods, sell goods as it is. Buy the goods, sell the goods as it is. Service industry, you know what we're talking about. Service industry is where you impart your knowledge or skill or both. So what am I doing? My knowledge imparting. I'm imparting my knowledge with you. So people do the services either by imparting their knowledge or they want to, use their skill set to make your life easier, or a combination of both. So that is service industry. Manufacturing industry and trading industry deals with goods. Service industry deals with services. Let's talk about the goods. Sir, seller is the person who sells the goods. Buyer is the person who buys the same goods. So at which point of time, seller should record his sales and buyer should record his purchase? At which point, seller should record his sale, means record his income. And at which point, the buyer should record his purchase, which is expenses. The law says that record income when the ownership is transferred. Record the income when it is earned. But when do I know my income is earned? Record the income when it is earned. Income is recorded at that time when it is earned. How will I know when my income is earned? For that, law says that when the ownership is being transferred. When we say that the ownership is transferred to somebody else, that is a point when my goods is gone out of my control to other party. It is under the control of the buyer. That is when I say my income is earned. At the same point, at the very same point, the opposite person will record his expenses. So record income when the ownership is being transferred by seller. Buyer will record his expense at the very same point when the ownership is received. Now, the question that arises is that due to which all reasonings can you say that the ownership is transferred? Ownership is transferred when? Which is that point when I can say that the ownership is transferred? There are multiple situations. First situation, ownership is transferred or received by the buyer, transferred by the seller or received by the buyer upon signing the contract or the agreement, or upon delivery of the goods, upon receipt of money, or upon doing or not doing of an act. Fourth point. First, can I talk about the delivery of the goods? I purchase this product. I'm telling in my business, the moment I hand over the product to you, I'm telling in my business, I'm talking about my business policy. I'm into business of buying and selling this product. I'm telling that, look, Mr. Buyer, the moment I deliver this product to you, I'm assuming that my ownership is transferred to you. So once the product is delivered, and after that you break the product, damage the product, you are responsible. So when the responsibility is going to you, which means what? The ownership is being transferred. So upon the delivery of the goods, the risk and the reward associated with this product has been transferred. That is when I say the ownership has been transferred. What is meaning of risk and reward? If I give this product to you, there's a risk of damage. You can put it down, it will break. So if that responsibility is yours, then I say that the ownership is transferred. So in the business, at times the ownership is transferred upon the delivery of the goods. This could be one of the criteria. I might take this as a criteria. If I take this as a criteria, in my accounting policy, I have to mention that delivery is the criteria to record my income. Delivery is the criteria when the ownership is transferred, and that is the point I'll record my income. Like that, you have to mention in accounting policy. So what is accounting policy? Very simple. If you are doing business, I will come and do auditing of your business. I want to know in your book, when do you record the income? You will say that, sir, upon ownership transfer, I'll record the income. Then I will ask, according to you, when does ownership transfer? Then you have to tell, sir, in my business, delivery of the goods is equal to transferring of ownership. That is when we record the income. So you have to specifically tell me. Then I'll check all your sale transaction, whether it is as per that or not. I will check as per that. I'll be able to follow. So like that, you have to give accounting policies. So every business enterprise where you welcome an auditor to your business for auditing purpose, you have to give accounting policy. Accounting policy means what policy you have adopted to do the accounting. This income on what basis you are accounting? Tell us. Depreciation on what basis you are recording? Nancy, you're lost. Depreciation on what basis you are accounting? Because depreciation can be calculated as per SLM method or as per WD method. Depreciation can be accounted as per normal method or provision for depreciation method. So what are you following, boss? Because accounting allows you to do the accounting in multiple ways. SLA method also, WD method also. In which method you are doing, you let us know. So you give me a list of accounting policies that you adopted while preparing your accounts. You should tell me that. Keeping that policies in mind, what will I do? I'll check all the records. I'll check all the accounts. That is the accounting. So like that, whenever you go for articleship practical training, you will be given what? List of accounting policies that the company has adopted to do the accounting. Keeping that in mind, you will do the auditing work. Am I loud and clear? So now this businessman says that, sir, I am transferring the ownership to other person when the goods are delivered. So this is the policy of ABC Enterprise. ABC Enterprise says that upon the delivery of the goods, ownership is transferred. So after the ownership is transferred, if anything good or bad happens to the product, it belongs to the buyer, not the seller. Okay, this is one criteria. Is this criteria applicable for every product? For everything? No. You take the example of land. Buying and selling of land. How will you deliver the land? Like this, you'll take the land in hand and you'll deliver it. Unless and until you are Lord Hanuman, where you can lift the entire mountain. So if you want to sell a piece of land, what will you do? Land, take it. Like that will you tell her? So in certain goods, delivery is not possible. For certain goods, delivery is not possible. In that case, how will I transfer the ownership? Upon signing of the contract. On the contract paper, we agree. Today, when I'm signing this agreement, I'm declaring that I'm transferring the ownership to you. Like that, you're signing into contract. The moment you sign the contract, the ownership is being transferred. Any problem? In this, you'll study in depth where you know Indian Contract Act. Your first chapter, which Preeti is going to take on Friday. Depth you will discuss in depth. So this is one option. Another option. Some enterprises will say, sir, in my business, I feel the ownership is transferred only when I receive money. If you give me money, ownership is transferred. Delivery is not the criteria. What is the criteria? Receiving money is the criteria. So in your company, if you're accounting the sale only when the money is received, then that is your revenue recognition point. Revenue recognition point means what? Income recording point. Income recording point means what? Revenue recognition point. Revenue recognition. Revenue means what? Income recognition. Recording the income state. That is called as revenue recognition. When you come to intermediate, I'll be taking one accounting standard called as AS 9, Accounting Standard 9, in which I'll be discussing in depth about how the revenue is recognized. Here, I'm not going too much into depth. I'm just trying to tell this at superficial level. Question based on this will not come. But if this is not understood, you will not be able to record the entries. So this is the base for you to record the entries. Now tell me if you have any difficulty in this. So in accrual basis, income is recorded when the income is earned, not received. Earned, accrual. Income is earned. I am a person who's selling the goods. So when should I record my income? When the ownership is transferred. When all the ownership can be transferred. Ownership will be transferred either because of delivery or upon signing the contract or receiving the money. 3 option over. 4th option. Upon doing or not doing an activity or act or an event. You go to any departmental store. You take a chocolate. You have broken the wrapper. You've not ate it. You didn't eat it. You didn't take the delivery. There's no contract signed. Because you're going to departmental store. You took a chocolate. You just broke the wrapper. Did you sign any contract? No. Did you take the delivery? No, because the chocolate is still there in the premises of the shopkeeper. Money also not received and paid. I just broke the wrapper. Or I tore the wrapper. Now tell me people. Ownership is transferred or not transferred? 100% transferred. You try and see. Go to departmental store. Try to break the wrapper. Just go and tell, I broke the wrapper. Keep it with you. What will he say? Donkey fellow, pay for this and get lost. Which means what? Ownership is transferred. If he's asking to pay, why? Because he's saying that you are now the owner. You have broken that wrapper. Nobody else will buy. So you are the owner of that particular product. So by doing something or by not doing something, still you become the owner of that product. So this is the 4th example. Any problem in this? This point is not added, I'll include it. Can somebody remind me this point alone? At the end. Today itself, once the class gets over, I'll document it. But this is the point when the seller will record his income and buyer will record his expense. This is a point when I say income is earned for the seller and expense is incurred for the buyer. This is in what context? The context of goods. Now we have to discuss the same point in the context of service. Income is recorded when it is earned. In service business, when it is earned. Service provider is a person who provides the service. In our example, I'm a service provider. I'm providing the service to you, teaching service to you. So I'm a service provider. You are the service receiver. Records income. I will record the income when the service is provided. When I complete providing the service to you, that time it is recorded as my income. When will you record your fees as expenses? When you receive the service. Okay. Now again, service is of two types. One is one-time service. Second is continuous service. Example for one-time service. Now let's say this AC, there is a problem. So I'm calling an AC mechanic. He comes and does the service and he goes. Once the service is completed, he takes the payment. The payment what he's taking now, is it for one-time service or multiple continuous service? One-time service. One-time service means what? The person does the service. Service provider does the service. Against it, he takes the money in one shot and goes. That is called as one-time service. So when will the AC mechanic record his income? Once the service is completed, he has earned that money and he will record the income in his books of accounts. Am I loud and clear? But so this is a case of one-time service. No. In India, we have other type of services called as continuous service. The money that you have paid me, I'm going to give you service continuously for 9 months. So is it one-time service or continuous service? Continuous service. Means what? AC mechanic is coming one day, in the 2 hours he's servicing and going. With that, game over. In that 2 hour, the service deal is over. This is one-time service. Continuous service, what happens? Every day you're coming to me. Every day is a new beginning, you're coming to me. So I'm giving you continuous service. So in continuous service, when will I record income? On proportionate basis, on the basis of percentage of completion. This again is a CA intermediate topic. How much portions are completed? To that extent, I'll record the income. So let's say by this month end, if 10% syllabus is over, then whatever fee you have paid, 10% of that I'll record as income. Next month, another 10% over. The next next month, again 10% income I'll record proportionately. So on the basis of completion, on the basis of percentage of completion of the portion, proportionally record my income. This much depth is not required because this is CA inter topic, but I'm telling you because you need to know as a service provider, at what point you should record your income. Income should be recorded when it is earned. As a service provider, when will you earn income? When the service is completed fully on one-time basis, or when the service is completed on the percentage of completion basis, that time you record your income because that is when your income is earned. Now tell me, what is your doubt? And the point when you record your income, the very same point, the service receiver will record your expense. So the point at which the seller records his income and the buyer records his expense, the point is same. Situation is same. Same way for the service provider and service receiver. In this, if you have any problem, let me know. In this, if you have any problem, let me know. No energy.
Sir.
No energy. If this is clear only, I can go to the next point to discuss the concept of outstanding expenses, accrued income, unearned income, and prepaid expenses, outstanding expenses, income earned in advance, and accrued income. These are the 4 concepts. These 4 concepts are based on accrual basis only. If you are following cash basis of accounting, you need not be bothered about outstanding expenses, prepaid expenses, accrued income, and income received in advance. You're not supposed to be bothered about it. These 4 will not be taken into consideration if you are following cash basis of accounting. But if you are following accrual basis of accounting, then yes, these 4 needs to be considered. And this 4 concept is derived only basis of accrual basis of accounting. So if you're clear with these 2 concepts, I can go ahead with those 4 sub-concepts. Please tell me clear or not clear. Yes. If I am an entity following cash basis of accounting, when should I record my income? When it is received. When should I record my expenses? When it is paid. If I am an enterprise following accrual basis of accounting, when should I record my income? When it is earned. When should I record my expense? When it is incurred. If I am a dealer of goods, if I am a seller of goods, when do I say my income is earned? When the ownership is transferred. As a buyer, when do I say my expense is incurred? When again ownership is received. Which means when the ownership is transferred by the seller, the very same time the ownership is received by the buyer. So for the seller it is earned. For the buyer it is expense incurred. Any problem? And how the ownership is transferred, the criteria is discussed. How the ownership is being transferred, the criteria is discussed. Yes. Types of service also discussed. Any problem in this? No problem. You want a break now? It is 12:27. So I can give you a break of 8, 9, 10. 3 minutes and 5. 8 minutes I can give you a break. Total 8 minutes break. Okay. So let's continue after break with the 4 important concepts, which is the base for your final accounts. Yes, people, welcome back from the break. So let's continue. Yes, now that we have understood what is cash base of accounting and what is accrual base of accounting, related to accrual basis, I have to discuss 4 concepts with you. In that, the very first concept that I'm going to discuss is the concept of outstanding expenses. Outstanding expenses means expense incurred, but amount or money not paid. Expenses incurred, expenses incurred, but money not paid. Let me take an example of salary. See, most of the companies, if you appoint an employee by the month end, 30 or 31, they don't pay the money. They will take additional 4, 5 days or 2, 3 days. Then only they make the payment next month. Other companies, they have the habit of making the payment immediately. So if you're, let's say, going for articleship, you're going to Big Four. Big Four has got the habit of making the payment of stipend 30 evening or 31 evening. You will get a message in your mobile. 4,000 credited to your salary account. Like that message will come. So happy you guys are, no? Okay. 4,000 only now. Deloitte, Big Four will get more. 11,000, 12,000 also will get. So 12,000 salary credited to your account. But that is not salary, it is stipend. Okay. We are talking about those scenarios where the salary is not paid at the month end. The salary is paid next month beginning. So if you take my example, in my company, I don't pay the salary month end because I'm waiting for some collection to happen the subsequent month. So we have the habit of making the payment when next month, let's say 5th, I'm taking for convenience sake. So if my employee is working in the month of April, actually when I'm making the payment, 5th of May, I'm making the payment. So my accountant is having the habit of recording the transaction as expenses only when money is paid because he has not straight accounts from correct. So 5th of May, what entry will he pass? Salary account debit to cash. He's recording 5,000 rupees or let's say 15,000 rupees. This is which month salary? This is April month salary paid in May. Like that, May month salary will be paid in when? June. June month salary? In July. Like that, if I keep on going on, January month salary paid in Feb. Feb month salary paid in March. So payment done when? May, June, July, August, September, October, November, December, Jan, Feb, March. How many months? From June to March, 11 months. Sorry. From May to March, 11 months. This is May. This is March. So May month to March month, how many months? 11 months payment. Do you agree with me? Do you agree with me, everybody? So if I multiply this with 11, what do I get? For convenience sake, can I take this 10,000? Let's say the salary per month is 10,000. So how much is my 11 month salary? 1,10,000 is my 11 month salary. My accountant recorded this entry salary to cash only for 11 months because according to him, whatever money is paid as expenditure. Okay. If I go with what he has done, if I record this 1,10,000 as my salary expenditure in my P&L account, will I be right or wrong? If I record only 11 month expenditure in my books of accounts, 11 month salary is 110, means the entry what he has passed. If I record that entry as my expenditure, will I be right or wrong? I'll be wrong. I'll be wrong means I'll be violating which principle? I'll be no prudence. No, not prudence. We'll be violating matching principle. What does matching principle says? Matching principle says that record the expenses to the extent benefit received. Your employee has worked with you from what month to what month? She worked from April to March. Do you agree with me? Online people. The employee has started working in your company from 1st April and she worked or he worked till end of March, 31st March. So for how many months did the employee work? 12 months. So as an employer, I got the service of my employee. Correct? No, employer does service to my business. So as an employer, I got the service from my employee for how many months? April to March, 12 months. So I received the benefit for how many months? 12 months. But when you did the accounting, you recorded the salary expenditure for how many months? 11 months. Benefit received for 12 months. Expenses record for 11 months. Is it matching? No. This needs to be matched, which means what? The benefit should match to your expenses. Your benefit and expenses should match. I'm not saying that my income and expense should match. If my income and expense will match every time, then I'll never be in profit. It'll be no profit, no loss point. It'll be a break-even point. I'm not saying that my income should be equal to expense. I'm saying that my benefit should be corresponding to the expenses, or the expenses should correspond with the benefit that I received. If I'm getting benefit for 12 months, I should record my benefit for 12 months. If I'm getting benefit for 12 months, I should record my expenses for 12 months. That is what I'm saying. But you have recorded your expense only for 11 months. So that 1 month expenditure, why you didn't record? The accountant is saying that this is not paid. No. Because whatever is the March month service, when do you make the payment? 5th of April. So next year I'll record. Is it right? No. If I record that, if I record March month expense in the April month, you're violating what principle? Matching principle is violated. So you have to record that expense in the current month only. Now, if I record the entry in the current month, that is salary to cash, what you've recorded here, this is from April to Feb. April month salary to Feb month salary. Do you agree with me? April month salary paid in May. Feb month salary paid in March. So technically, this is salary of which month? April to Feb. March month salary not recorded. Why? Because it will be paid in April. So as per accountant, he will record in April. But can we allow him to record in April? No. Because if I do so, I'll be violating matching principle. So March month salary entry, I should record in March month only, when 31st of March. What is the entry? Sir, since it is expenditure, salary account debit. How much? 10,000. Did you make the payment? No, not cash. Two cash will come only if I'm making the payment, boss. But I'm not making the payment. No, I'm making the payment 5th of April. So this I'm not paying now. When will I pay? In future. Anything that I pay in future is liability. So the name of the liability here is outstanding salary 10,000. Because I am satisfying the matching principle. 1 point. This matching principle came because of which concept? Accrual concept. Accrual concept says what? Record the expenses when it is incurred. Record the expenses when it is incurred. My expenses when it is incurred. Employee is a service provider. Employer is a service receiver. So record your not income, expense when the service is received. The employee has worked in your company from 1st of March to 31st of March. So in this 31 days, have you not received the service? Yes. So the service is received completely from the employee. That is the point when you should record your expense. Who is saying this? Accrual concept. So accrual concept plus matching principle, both have to satisfy. That is how, because of these two people compelling me, I have to record this entry. So salary to outstanding salaries entry is coming because of accrual concept and matching principle both put together. So matching principle or accrual concept says what? Record the income when it is earned. Record the expenses when it is incurred. So here 10,000 worth of expenses incurred because when I receive the service, I have the obligation. On 31st March, I have the obligation to pay the money. That is a different story that I chose to pay the money next month for my convenience. But technically, the obligation is arisen or not? Yes. So when there is an obligation that you have to pay the money, in that month when the obligation is created, you have to record your liability. Liability is what balance? Credit balance. To create liability, what am I supposed to do? Credit. That is why salary account debit to outstanding salary. Any problem? Any difficulty? No. Now listen to me very carefully. Your accountant has recorded the entry. What entry? Salary account debit to cash 1,10,000, which is the salary for 11 months. Do you agree with me? Now, I'm preparing a draft trial balance. In the draft trial balance, in the salary account, in the debit column, you have 1,10,000, correct? In your final accounts of 12th standard or 11th standard, you studied that adjustment. Outstanding salary is equal to 10,000, correct? You have a habit that when I open the P&L account, if I open the P&L account, you will record the salary value. You will record the salary in the P&L account. To salary, 1,10,000 in the inner column. And what did your teacher say? Add outstanding salary 10,000 and total is how much? 1,20,000, which is nothing but the salary for 12 months. My question goes to all of you. This 10,000 what you've added? This 10,000 what you've added? What is our adjusting entry? On 31st March, salary account debit 10,000 to outstanding salary. Correct? No? 10,000. This 10,000 what you've added, listen to my question very carefully. This 10,000 what you've added to your salary, is it the debit part of the journal entry or is it the credit part of the journal entry? Credit part of journal entry. Credit. Credit. Debit. Credit. 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 Debit. Credit. 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 Debit. Hey. 10,000 rupees you've added, no. How it is coming here? Only by passing journal entry. I told you anything and everything that is coming in your accounts, it is routed or rerouted through journal entry. So because of this journal entry, 10,000 is added. No. My question is it because of this 10,000? This 10,000 are adding or this 10,000 are adding? Is it the debit part of the journal entry or the credit part of the journal entry? Debit part. Credit. Credit. Debit. 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 Credit. Debit. Debit. Wonderful. Online people. All those who say credit part of the journal entry, raise your hands. All those who say credit part of the journal entry, raise your hands. So 10,000 what I credited? No, this 10,000 is what has been added here. How many of you are thinking that? Raise your hands. Gautam says credit part of the journal entry. Okay. Others. Anjali, Anjana, Barni, Darshini, Hema, Krish, Niyasha, Riya, Yashaswini. Nobody? Okay. Those who say debit, raise your hands. So the debit part of the journal is added. Online. Darshini says debit part. Anjali says debit part. Barni says debit part. Hemashri says debit part. Yashaswini says debit. Anjana, debit. Why no response from Krish, Neha, and Riya? Neha Shah, Krish, Riya Chavan. Are you all there?
Yes, sir.
Yes, sir.
Okay, what is your response? Debit?
Debit,
Debit,
sir.
sir.
Okay. All those who said debit part of the journey. All those who said debit, you guys are terribly right. Donkey fellow. To outstanding salary, we credited, no? What did I say in credit? This is a liability. Liability have credit balance. Hence, to create liability credit. So this will go where? In the liability part of the balance sheet, no, boss. P&L account, trading account is what? Nominal account. Debit all expense and losses. Debit all expense and losses. I should record expense, no? In this journal entry, what is my expense? Salary debited is expense, no, boss. So salary account, this is your expense and this is your liability. This will go to your P&L account. This goes to your balance sheet. This 10,000 is going there. But why are we recording to plus outstanding salary? They want to make you understand that this 10,000 is because of the salary which is outstanding. Means what? Expense incurred, money not paid. They wanted to give a description to it. No? Chumma, if I record add salary, you'll be confused. No, that is also salary. This is also salary. Why two separately they're given? You will be wondering. No, to make you understand that this salary is that 11-month salary which is paid. This is that 1 month salary which is not yet paid. But both are what? Salary. Are you able to follow? This is one point which I wanted to feed in your mind. Second point, all those who are happily thinking that in real life also, sir, add outstanding salary on the face of the P&L I'll do. Not possible. Never. Ever. You will add on the face of P&L balance sheet. Never. Why? Because let me open a salary account for all of you. What is the first entry that you recorded? Salary to cash. See in salary account, to cash how much? 1,10,000. What is the adjusting entry that you recorded? Salary to outstanding salary. To outstanding salary, how much? 10,000. This is the balance carried down. All the nominal account having the balance carried down, you will close by passing a closing entry. So what is the closing entry? P&L account debit to salary. So in salary account by P&L, 1,10,000. What is closing entry? I meant to discuss what is closing entry. 1,20,000. Sorry, not 110, 120. The entry for this is P&L account debit to salary. That is where in P&L account to salary will come now, boss. So now when I prepare the P&L to salary, how much will come? 1,20,000. When you recorded the first entry, only salary to cash, 110 came to your P&L account. When you record another entry, salary to outstanding salary, the salary ledger got upgraded from 110 to 120. And that is what will travel to your P&L account. Then in school, why did they tell us add outstanding salary? See, we guys understand something when we see it in a better way. So this presentation, why they opted? Because in the presentation, Kamacha, if they show this presentation, then you will understand, okay, outstanding salary is an item to be added. So they wanted us to learn something by looking at it. Some visuals have a long-lasting impact on our minds than orally heard. Some people are auditory in nature. Means what? When they listen to something, they'll immediately grasp. Some people are what? Visual in nature. They're able to grasp and learn when they're able to see it clearly. So people felt that by looking at this data or this presentation, we can put a concept in mind. The outstanding salary will increase my salary. So they wanted to give that kind of feeling to you. That's why they gave you this presentation. In 11th, it's I told you when I was teaching that this presentation is not allowed. Even now, when you do in foundation final accounts, you may have to do this presentation. But in reality, you have to understand, no, when you go and check in the articleship, you see company's balance sheet or trading P&L, you will never see this finding there. That time you will feel cheated. School cheated. College cheated. Academy cheated. Everybody said add outstanding salary in P&L. No, in real life, there is no add outstanding salary. That time you will be cursing me, To not get that curse, what am I telling? This will not happen in the real life. In the real life, add outstanding salary will not come. Entire salary of 1,20,000 be reflected in your P&L account is what I'm trying to say. Understood, not understood? Online people, understood, not understood?
Yes, sir. Yes, sir.
So the debit part of the
Yes,
salary, which is expense, that is what is going to your P&L account. Outstanding salary is a liability. Why it is liability? I'm yet to pay this money. I'll pay when? In future, after 5 days. Anything that I pay in future is liability. To create liability, I give a credit. Now tell me. Any problem here? No problem. So outstanding expenses means what? Sir, outstanding expenses means expense incurred, but money not paid. When will I pay it? In future. Anything that I pay in future is liability. So all outstanding expenses can be considered as of liability in nature. All outstanding expense of liability in nature. So expense outstanding. Outstanding means what? Yet to pay. Expenses to be paid. Outstanding means what? Yet to pay. So outstanding expenses means yet to pay expenditure. So expenses incurred, amount not paid. Now in this process, if you have any doubts, please ask me now itself. Any doubts here? No doubts? Loudly say, no doubts. Online people, no doubts?
No, sir. No, sir.
Yes,
No,
please
sir.
respond, please.
No, sir.
Next, prepaid expenses. Means expense not incurred, but amount paid. Amount paid. Outstanding expenses. Expense incurred. Prepaid expenses. Expense not incurred. Outstanding expenses. Expense paid. Prepaid not paid. Sorry. What I said? Expenses, outstanding expenses, payment not done. Here prepaid, payment done. Look at the word now, prepaid. I'm paying money in advance. Prepaid. Okay. But amount paid. Okay. Here, the best example is example taken from insurance concept. Now, listen to me. Don't do anything. Just listen. Current year, 25-26. Next year or subsequent year, 26-27. Any problem? Now, 1/7/2025. 1/7/2025. I paid 12,000 rupees towards insurance premium for safeguarding my stocks and assets. For protecting my stocks and assets against the risk of fire or theft, I've taken an insurance policy. Premium for that is 12,000. And it is for 1 year validity. It's for 1 year. So the money that I'm paying now is valid for how many months? 12 months. When does my 12 months get over? One day before the next year, which is 30 June 26. 30 June 26, the policy expires. Means the benefit from the insurance company will stop coming to me after 30 June. If I want to continue the service after 30 June, I have to renew my policy. I have to pay one more time. So my benefit is from 1/7 to 30 June. Do you agree with me? Online people, do you agree with me?
Yes,
Yes,
sir.
sir. Yes, sir.
Yes, sir.
1/7/2025, I made the payment. My accountant will record one entry. What entry will he record on 1 July 25? According to him, anything that is paid is expenses. Anything that is paid is expenses. So what entry will pass? Insurance premium expense account debit to bank. 12,000, 12,000. According to him, this entire 12,000 rupees is expenditure. According to you, since you have studied little bit concept from me, since you are Pratik's a student, you tell me what accountant did is right or wrong? Right or wrong? Right. 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 Wrong. 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 Just because majority is saying wrong, you don't have to go with wrong. Right or wrong? Wrong. 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 All of you wrong. Anybody says right? ஏமா ரெண்டு பேருமே ரைட்னு சொன்னீங்க? Prepaid expenses asset. Where did he write prepaid here? I'm asking what accountant it is right or wrong. This is the entry my accountant recorded. Is this right or wrong? If I record the entire 12,000 rupees in the insurance premium expense account, full 12,000 will go to my P&L as expenditure. Is it right? No. Matching principle says that record the expenses to the extent benefit received. Guys, in the current year, my financial year ends here. From 1 July to 31st March 26, from the insurance company, I will receive benefit for how many months? 9 months. In the current year, from 1 July to 31st March, how many months are there? 9 months. So insurance company is going to serve you for 9 months. When the benefit is going to come to you for 9 months, why did you record the expenditure for 12 months? This is the expenditure for 12 months. Matching principle is getting violated here if you record the entire 12,000, because 12,000 is expenditure for the entire 12 months. In this 12 months, in between, accounting period is getting broken. So in my current year, the benefit is only coming for 9 months. Whereas 3 months benefit is coming to me when? Next year in future. Correct? No? Accrual concept says that record expenses when it is incurred. Current year expense incurred only for 9 months, but you record it for 12 months. So can I say in the debit part, if I record the expenditure for 9 months, it is correct. But the expenditure that you recorded for extra 3 months, it is wrong. So what is the amount for the 3 months? So 12,000 is for 12 months. Then for 3 months, how much? Cross multiply 12,000 into 3 by 12, which is nothing but 3,000. So are you all trying to say me that in this 12,000, 3,000 you have recorded extra? Correct? So in debit, if you have to remove extra, I have to put that in credit. So my credit is going to be at the end of the year. All this is happening at the end of the year. 31/3, what is my adjusting entry? So 2, insurance premium expenses 3,000. This is nothing but reversal of expense. I'm reversing my expense. The moment I put 3,000 in credit here, what is the amount balance in the expense account? Proper 9,000 will become the expenses. Now it is right. Okay. You remove 3,000 from debit and put in credit. No. In place of that, I have to give some other debit. No. What is this 3,000 debit? It is called as prepaid insurance account debit. What is the nature of prepaid insurance? It is asset. It is asset. Sir, why do you call this as asset? Because 3,000 rupees what I paid. No. For this, I'll receive service in future. In next 3 months, insurance company will provide me services. I'll get benefit in future. So what is asset? Anything that I own in the business is asset, or anything that I receive in future is asset. So here 3,000 worth of service I'm going to receive in future, hence it is my asset. So this is your rectifying entry. This is your rectifying entry. Prepaid insurance to insurance premium expenses. Now, in real life, you'll come with two situations. One situation, this is possible, where the person has done the wrong entry. and you go and do the rectification. Sometime the accountant, what is doing the accounting, maybe you have studied from whom? Now after this, after this. He studied from me, no? Will he record the entry wrongly in the beginning? No. So on 1 July itself, what he'll do, no? He will split the entry into 2 parts. 9 months expenditure in the expense account, 3 months in the prepaid account, and 2 bank entry. So he will combine both this entry and do it properly in the first go, one go itself. What entry will do? Insurance premium expense account debit. How much? 9,000. I should record only 9,000 expenses because I'm getting benefit only for 9 months. Remaining 3 months expenses I should not record. Now I should record in future. So that 3,000 is nothing but your asset, which you will have to receive the benefit in future. So prepaid insurance account debit 3,000 to bank 12,000. If you combine these both entry, it is going to be this entry. You can try and see at home. So either now you can. So if you're doing the right entry, this is the right entry to be done at the time of making the payment itself. But on the payment date, if you've done the wrong entry, on 31/3 at least when auditing, you have to rectify this entry. So in audit, this is your findings. If the accountant does it wrongly, as an auditor, you have to do your findings and report to the company, to your auditor, to your boss. Now tell me, in this any problem? No problem. Now, accountant recorded entry what? Insurance premium expense account debit 12,000 to bank 12,000. Okay. The company gave you the trial balance and then they're inviting you for the audit. After this, you're going for auditing, then you find the mistake. But until then, the trial balance is prepared. No, they've given the wrong trial balance only to you. So in debit part, what is there? Insurance premium expenses 12,000. Now tell me, you will go and tell that this is wrong. So you'll pass a rectifying entry. What is rectifying entry? Prepaid insurance account debit to insurance premium expenses. How much? 3,000, 3,000. Now, what is the treatment or what is the impact in your P&L account? So to insurance premium expense, the initial part is how much? 12,000 will go there. In your school, what your teachers made you by heart? Prepaid means minus. Outstanding means add. Minus prepaid expenses. How much? 3,000. Balance how much? 9,000. My question to all of you. This 3,000 what you have subtracted, is it the debit part of the journal entry or the credit part of the journal entry? Credit. 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 My question is, this 3,000 rupees you're minusing from your P&L. This 3,000 what you're minusing, is it because of the debit part of the journal entry or the credit part of the journal entry? Credit. 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 All of you credit. Anybody debit? Previous question wrongly you said. Now the moment you got the concept, you got the answer. Now what is this? This is nothing but reversal of expense. In this journal entry, which part of the journal entry is attributing to reversal of expense? The credit part of the journal entry. Expense is what balance? Debit balance. To increase expense, debit. To decrease expense, credit. So when I'm decreasing expenses 3,000 rupees, it is because of the credit part of the journal entry. Debit part of the journal entry, which is prepaid insurance, is nothing but asset. So this will go to your balance sheet. In both the places you put prepaid. Prepaid, what you put in the balance sheet is the genuine asset. This prepaid, what you're minusing here is only to give you a feeling. Oh, prepaid has got the impact of reducing my expenses. They want to give a feeling to you. They wanted to develop that visualization to you. So when you look at this, you will never forget it. Oh, outstanding. That book or image will come. Oh, outstanding means add plus symbol. Prepaid means minus. Like that, that visual is made you to remember that point. So to remember that, this presentation has been adopted. But the concept you have to know. So this is the reversal of expenditure. In real life, will you ever get to see minus PPE? Not possible. Why? Because when you open the insurance expense ledger, insurance premium expenses ledger, what is the original journal entry? Which the accountant recorded? Insurance premium expenses to bank. To bank how much? 12,000. You passed one rectification entry. What was that? Prepaid to insurance. In insurance, buy prepaid. Buy prepaid expenses or insurance 3,000. What is the balance? 9,000. This is what is transferred to your P&L account. This is what you transfer to your P&L account. Now in the P&L account, to insurance expense, will 12,000 come and sit? What will come and sit? 9,000. Ultimately, the closing balance of the ledger is coming and sitting in the P&L account by passing a closing entry. Then how is this presentation justified? This is only to make you understand that prepaid expenses got the impact of reducing your expenses. They wanted to put that concept in your head by giving a proper visualization. That is why this presentation is opted for. Otherwise, this will not come. So technically speaking, in your P&L, net 9,000 will come, and in the balance sheet asset side, prepaid insurance 3,000 will go and sit on the asset side. That is all. Now tell me if you have any problem. Online people, do you have any problem in this?
No, sir.
Fast. No problem. Okay.
No, sir.
Let's go to next concept. Accrued income. Accrued income. What is the meaning of this? Income earned, but amount not received. Amount not received. Example. All of you know fixed deposit. What is fixed deposit? So whatever surplus money we have, that surplus money we invested. We work hard to earn money. Now that money also should be working more hard to get more money. So idle money at home, no use. So you put that money into work. So you give it to bank. Bank, since banker is enjoying your money, banker cannot enjoy your money free of cost. You will never give your money free of cost. You will tell, if I'm giving money, in return give me interest. So that is a source of additional income. So now, this is financial year 24-25. Let's say this is current year 24-25. 25-26. 26-27. 27-28. On 1-4-24. You have put a deposit, fixed deposit for 1 lakh at the rate of 10% interest per annum. And it is simple interest. Do you understand what is simple interest? Compound interest. What is simple interest? If I get the interest only on principal every time, it is simple interest. But if I get interest on principal plus interest, cumulative interest, it is called as compound interest. Means if I start getting the interest on the interest also, on the first year interest also, second year I'll get the interest. On first and second year interest put together, third year interest I'll get on that also. That is principal plus interest. On that, again interest. It is called as compound interest. You'll be studying this in max. I don't think so ma'am has taken this topic, no? No. This is there in your max. Now we are doing simple interest. Means what? Every year you will get the interest on principal. Now, when you had put a fixed deposit for 1 lakh, the banker said you that I will give you the interest money in your bank account in form of cash only at the end of the 4 years. Once the deposit is matured, means this is year 1, 2, 3, 4. At the end of the 4th year, 31st March 28, I will give you the principal plus 4-year interest. So all the 4 years interest in your bank account, when it is coming? 31st March 2028, it is coming. Okay. Any problem in this? Now, we are following accrual basis of accounting. Accrual basis says what? Record income when it is earned. Record income when it is earned. Now, are we talking about goods here or service here? Service here. Who is providing service to whom? Banker is providing service to us. We are providing service to bank. We are providing the financial assistance to bank. For enjoying that assistance, bank is providing you with the interest. I am service provider. I am providing service to you. In return, you are paying me the fees. Same logic there also. Bank is in need of money because bank is into lending business. Bank wants to earn the income, means he has to lend more money. So bank does not have the money. So bank is taking financial assistance from us. So we are helping with the money to the banker. For enjoying that money, banker is giving the fees in return in form of interest. So we are the service provider. Banker is the service receiver in case of fixed deposit. Logic is clear. Now, in the case of service industry, record income when the service is completed. Here, we provided 1 year service to banker. My service is completed here or not. This is continuous service. I'm giving service for 4 years. Now here, year end comes. In year end, accrual concept says what? Or matching principle says what? Record the income to the extent benefit received. You got the benefit for 12 months. Shouldn't you record income for 12 months also? Yes. You're getting benefit, no, boss. Why benefit is defined here is because 31st March 25, your interest is earned. Can the banker deny, get lost, and not pay the interest? He has to pay the interest. If not here, here. Because banker has enjoyed your money here. So right to receive the money is established here. 31st March 25, even God cannot deny the interest to you. Because you have earned it. 1 year crossed means you have earned it. Nobody can deny the interest. So interest is earned. If interest is earned, record no boss. But you're not recording. Why? Because our accountant records the interest income when? Only when paisa is received. According to the accountant, this interest for 4 years, when he will record in the 4th year end, when actually money is received. Is it correct? Accrual concept says that record income to the extent earned. Have you not earned the money here? I have given the service for 1 year. The service for 1 year is completed. So accrual concept says that record your income on 31st March 25. Record it. Who says? Accrual concept. Please tell me, on 31st March 25 to record my interest income, what should be the entry? Sir, interest income is nominal account. Debit all, expense losses. Credit all, income and gain. So to interest income. How much? Sir, 1 lakh is a principal amount into 10%, which is 10,000. Did you receive the money on 31st March? When I'm recording this entry, did you receive money? No. When will you receive? In future. Anything that you receive in future is asset. Asset is what balance? Debit balance. To create asset, debit. So accrued interest account debit 10,000 to interest income. On 31st March, you're writing this as your adjusting entry. Any problem? Now, imagine there's another fixed deposit. There's another fixed deposit for 3 lakh rupees. Only for 1 year. At 10%. And on 31st March 25, you got the interest in your bank account. Interest received. My accountant will record the entry. What entry will he record? He will record bank account debit to interest income or interest received. Both are correct. How much? 30,000, 30,000. So my banker is record only, my accountant is record only this entry. This entry he did not record. Correct? If this entry he did not record, and after this entry, if the trial balance is prepared, can I say interest income or interest received in the credit column, 30,000 will be reflecting? Yes or no? Correct? After this trial balance, you did the auditing and you found out that apart from this 3 lakh worth of FD, there is one more FD for 10%, which you will get after 4 years. But this gentleman is not recorded because according to him, anything that I receive is my income. This is not received, not my income. So he didn't record. Donkey fellow, he didn't record. You are recording. What entry are recording? Accrued interest to interest income. How much? 10,000, 10,000. Now in the P&L, what is the presentation? In the P&L, to interest, what will you show? Sorry, by interest, what will you show? Sir, credit all income and gain. Credit side of the P&L, record the income. So by interest income, 30,000 you will show, which is coming from the trial balance. Correct? No? And your teacher told you, if there is any accrued interest, what are you supposed to do? Add accrued interest. How much? 10,000. Total income, how much? 40,000. In this 40,000, 30 received, 10 not received. Correct? My question to all of you, this 10,000 what you've added here, is it because of the debit part of the journal entry or is it because of the credit part of the journal entry? All credit now. Because interest income is my nominal account. This is what is getting included in my credit side of the P&L. So credit part of the journal entry is what is added here. But description I have to give no, boss. What description I'll give you? What will I call this 10,000 as? Accrued interest. So that I can differentiate between this and this. And moreover, this presentation you can absorb, digest well. So people opted for this presentation. But in reality, will you have this presentation in the P&L? No. How does the P&L looks like? So by interest income, full 40,000 will come. Why? Because if I open the interest income ledger, what is the first entry that you recorded? 30,000. Bank to interest income. So by bank, 30,000 recorded. Do you agree with me? And what is adjusting entry? Accrued interest to interest income. So in the interest income account, by accrued interest. How much? 10,000. So whatever is the closing balance of the ledger, this 40,000 be transferred where? To P&L. So in the P&L, full 40,000 is coming, no boss. So in the P&L, entire 40,000 will come. But still you have to do this presentation because you have to show the examiner, you have to make him understand that this 10,000 is added to this 30,000. You have to show him that presentation so that he can believe you that you know the concept. Okay, ma. So credit part of the journal entry goes to your P&L. Debit part of the journal entry goes at where? Asset side of balance sheet. You're telling this is asset. Why this is asset? Because, sir, anything that I own in the business is asset, or anything that I receive in future is asset. This 10,000 I will receive after 4 years. Hence, this is my asset. So this goes to your balance sheet. This goes to your balance sheet. On the asset side, accrued interest 10,000 rupees. Any problem? Online people, any problem?
No, sir.
Everybody sorted? Everybody's clear with the entry part? Anybody's got any difficulty in digesting this? Because if this is not clear, one, your journal entry is screwed. Second, your full final accounts is screwed. There is no final accounts without these concepts. And there in final accounts, we'll not have time to discuss all this one more time. In 11th, I discussed this concept twice. One in journal topic, one more time. Because you were Amul BB back then. No? So I discussed one more time where? In the final accounts. Now here, will we have the time to do the final accounts? All the discussion one more time, not possible. Because we have constraint. We have what constraint? Time constraint. Last concept. Income received in advance. Shortly and sweetly called as unearned income. Unearned income. Income received in advance or unearned income. Now, 3 concepts done now. Based on that, tell me the description of this. Income not earned. Very good. But amount received. Amount received. Income not earned, but amount received. Now, classic example. CA foundation fee. 40,000 you paid. With these 2 classes that you have enjoyed from me, or what, 2 weeks, no? Second week. You like my teaching very much. You said, sir, for CA enter also. Enjoy, sir. I'm paying just group 1 fees. Both the fees paid. Both the fees paid now. How much fees paid? 70,000 paid. Now, my accountant, according to him, this 70,000 is what? Income. Why? Because anything received for him, it is income. Anything received for him, it is income. Now, let's say you paid this money on 23 April 2025, which is today. Today, my accountant, what entry will he record? Sir, money received in bank. So, bank account debit. How much? 70,000. 2. Coaching fee income. 2 coaching fee income. Credit all income and gain. 70,000. He has recorded this, boss. Right or wrong? Wrong. Wrong. What is wrong? Why are you saying this is wrong? Justify. Now that you know the concept, tell me why it is wrong. Service not yet provided. For which? Inter. Sir, the 70,000 rupees, out of the 70,000 rupees, at the end of the year, 40,000 rupees will be transferred to P&L because you will complete the foundation coaching classes by year end. By year end, before year end, it will get over. But inter, when will it start? Next year only it will start, no, sir. So next year, if it starts, when you will complete the service? Next year. So for remaining 30,000, when the service is completed next year, this should be income of next year. But you recorded income in the current year. You means accountant, not you will not record. I know you've studied, no. Correct, no. This is the entry that accountant is passed. Now you're going for articleship. There's one company who has done this. Or let's say you are coming here itself for auditing, no. What is a rectification entry will teach to my accountant? What I taught you, that only will teach, no? So what did I teach you and what are you going to teach him? Tell me. 31/3/26. End of the year only will come for auditing. What entry you will pass and what will you teach him? You will tell him, donkey fellow, in this 70,000, entire 70,000 not a Pratik sir's fees. In that, in the current year is given only service for 40,000. Remaining 30,000 service is going to give next year only. So now, in this 70-30 income extra you have recorded. In credit, you record extra 30,000. To remove something from credit, I have to give a debit. So what is my debit here? Coaching fee income account debit. How much? 30,000. Two. Income received in advance account or unearned coaching fee income account. Ledger name can be anything. Okay. Now, this 30,000 what you're reversing is nothing but reversal of income. And this is your liability. Why is this liability? Because if I don't take classes, I am supposed to repay this money back. So unless and until I earn something, the money, your money, what I have, I am under obligation to pay it back to you. Because this income is earned, this 30,000 is earned when I complete my service. Until I complete the service, it is not my money. So your money in advance is with me. So whenever you ask it back or whenever I don't give the service, I have to repay it back. So anything that I have to repay in future, in those circumstances, this becomes my liability. Hence, income received advance or unearned income is always a liability. Any problem here? Entry is clear. Now, what is the balance in the income account? That is coaching fee income account. What is the balance in it? 40,000. Because from 70 credit, if this is credit plus means you reversed by giving a debit minus. So what is the balance in coaching fee account? 40,000. Now, on 23rd April, what entity did your accountant pass? Bank account debit to coaching fee 70,000, 70,000. With this, he prepared the trial balance and gave you. So in the trial balance, where will the coaching fee come? Debit column or credit column? Coaching fee where it comes? Sir, credit or income and gain. So this ledger will have what balance? Credit balance. So 70,000 rupees coaching fee income comes in the credit column of the trial balance. After that, you did the auditing. 31st March 26, you pass a rectifying entry. What is a rectifying entry? Coaching fee income account debit. That is reversal of income to unearned income or income received in advance 30,000. Which means after this entry, what is impact in the P&L? So in the P&L, coaching fee income initially 70,000 minus unearned income or income received in advance how much? 30,000. How much is the balance? 40,000 rupees is the correct income of the current year. Because I'm providing the service for 40,000. So income also for 40,000 should be recorded. Now, my question goes to all of you. This 30,000 what you've subtracted here, is it the debit part of the journal entry or is it the credit part of the journal entry? Sir, it is a debit part of the journal entry because debit part of the journal entry talks about reversal of income. Here, what I have done in the income, I have subtracted the extra income. I have reversed my income. So this is the debit part of the journal entry. Credit part of the journal entry is a liability that goes to the balance sheet. Now, in reality, will you have this presentation? No. So in reality, the P&L will be what? Coaching fee income directly 40,000. Why, sir? Because if I open the coaching fee income ledger, what is the first entry? Bank to coaching fee. In coaching fee, by bank. How much? 70,000 on credit side. Credit here represents plus. Debit represents minus. What is the second entry? Coaching fee to unearned income. So to unearned income, how much? 30,000. Means I'm reversing my income. So what is my balance income? 40,000 and this will be transferred to your P&L. So coaching fee to P&L. In P&L, by coaching fee. By coaching fee, how much will come? Only 40. But presentation, we have to do that because we have to make the examiner understand that this is the impact of the transaction on the face of P&L. Like that, we have to give him an understanding. Hence, you will get the marks accordingly. Any problem with this? Any problem? No, sir. Now, what was the first concept that we discussed? Outstanding expenses. What is the description? Expense incurred, but not amount not paid means understood, but not paid. What not paid? Amount not paid. Okay. Prepaid expenses. Expenses not incurred, but paid. Then we learned Accrued income. Accrued income. Income earned but not received. What is not received? Amount, cash, money not received. Then unearned income or income received in advance. Income received in advance. Income not earned but amount received. Any problem? Prepaid expenses, sometimes it is called as unexpired expenses. Means what? The benefit that you're supposed to receive from the insurance company for the 3 months in future, that is not expired yet. So this is also called as unexpired expenses. Any problem? Unearned income. Unearned income is also called as income received in advance. So sometimes these have double nicknames, different names. So either ways they can ask the question. You have to be very vigilant. Any problem here? Now, listen to me very carefully. In your 11th and 12th, you concluded that the word outstanding is always related to expenses and the word accrued is always related to income. But now we'll study that the word outstanding and accrued can be interchanged also. Outstanding and accrued both means yet to. Outstanding and accrued both means yet to. If I use the word outstanding with the expense is normally paid. So outstanding means yet to. Expense means pay. Yet to pay expense is called as outstanding expenses. Any problem? Yet to pay. If I use the word accrued expense, accrued means what? Yet to. Expense means what? Pay. So can I say yet to pay? So in your question, if they use the word accrued expense, you will not get confused. Both are same. Okay. Outstanding income, they'll use the word sometimes. Outstanding means what? Yet to. Income means what? Receive. Income is meant to be received. Yet to receive means what? Outstanding income. Income earned, money not received. Accrued income. Accrued means what? Yet to. Income means what? Receive. Yet to receive income, accrued interest. Now in your final accounts, they will interchange the word and give you. So don't think that outstanding is only related to expenses, accrued is related to income. It can be interchanged because they become grown-up people, mature people. So you have to understand the logic behind it. Don't by heart. If this is clear, can I go forward? Online people, if this is clear, can I go forward?
Yes, sir.
Those who are sleeping,
Yes,
good morning.
sir.
Illustration 15. No, 15. Past journalities for the following transaction. Interest due but not received. This is out of that 4 concept. Which concept? Accrued interest. How do you say it is accrued? How do you say this is income? Sir, interest is given in relation received. So when do I receive my interest? Only with my income. So this is accrued interest. Means what? Income earned. Money not received. Money not received. So please tell me, what is the entry for this? Sir, interest is earned but not recorded. No. Why? Because my accountant record the entry only when it is received. Since this is not received, the donkey fellow did not record. But you record. Income is what? Gain. Income gain is credit balance. Revenue. Create all income and gain. So 2 interest income. Did you receive the money? No. When will you receive? In future. Anything that I receive in future is asset. Asset is what balance? Debit balance. To increase asset, debit. More accrued interest, more money I'll get in future. So increase asset balance, give a debit. So what is entry? Accrued interest to interest. Any problem? You become pro, I'm telling you no. If you understand the logic, let the question be how much ever twisted. If you apply your mind properly, you'll get the answer. Now tell me people, accounting is an interesting subject, easy subject or not? Yes, every concept in accounting, if you learn it properly, conceptually, without by hearting, there is no other subject easier than this subject. That's why I'm teaching accounts now. If it had been off topic, will I be sitting and teaching you? Think about it now. Such a jujjupi topic this is. Salary due to staff 25,000. Due to staff. Due to staff. Due to means what? Due to be paid. And they're telling that salary is due to staff. When does the salary become due? When I've received the services. Benefit received, but I'm not recorded as expense, because as per my accountant, I should record this 25,000 as expense only if it is paid. Since this is not paid, you didn't record, but you will record it. So what will be your entry? Salary to outstanding salary. Salary to outstanding salary. Salary is what? Nature. Expense. Nominal account. Outstanding salary is liability. Accrued interest is asset. Interest, income. Easy. Asset to income, expense to liability. Always this is true. Out of the rent paid, out of the rent paid this year, out of the rent paid this year, 2,000 relates to next year. Means the 2,000 rupees what you've paid, I'm going to give the service, I'm going to get the service next year. So let's say the total money that you paid is 14,000. So while making the payment, how much did you make the payment? 14,000. What entry? Rent expenditure account debit, let's say 14,000. I'm randomly assuming. To bank 14,000. I'm telling that in this 14,000, you paid 2,000 extra, where the service is going to come only next year. So matching principle says what? Record the expenses to the extent benefit received. In current year, you enjoyed the premises for 12 months, but you have recorded for 14 months. Let's say the rental expenses per month 1,000. So 1,000 to 12 months is how much? 12,000. So 12,000 I should record, no, but we recorded 14,000. Means extra 2-month rent I have recorded here. 12-month benefit received. How can you record 14-month expenses? Matching principle does not permit. So in this 2-month expenditure is extra. So remove, what am I supposed to do? 2 credit rent expenses, 2,000 credit. Debit what? Prepaid expenses or prepaid rent account debit. Why it is debited? So because this is asset. Why is this asset? I'm going to get 2,000 worth of service in future. So it is asset. Anything that I receive in future is asset. So this is your asset. And this is your reversal of expense, not expense, reversal of expense. Very good. Tired. Leave this. Received commission of 10,000 by check, half of which is advance. Guys, you've received 10,000 by check. In that, they're telling that 5,000 is advance. Why are they telling this 5,000 is advance money? Because this person has not given the service for this 5,000. He has given the service only for first 5,000. Service received, amount received. Here, amount received, service not received. When will I receive service? In future. So this is income of future. But what did my accountant do? The moment I got this money, he recorded the entire 10,000 as commission income. So what entity did my accountant pass? Bank account debit full 10,000. What is received? No, according to him, it is full commission income 10,000. Now, okay, fellow, this is wrong. We have to say him. In this 10,000, for 5,000, I provided the service in current year. So this 5,000 will be the income of current year. Remaining 5,000 services not provided in the current year. When will I provide? Next year. So this should be the income for next year. So now I have to reverse the income. Income is currently in credit. To reverse, I have to give a debit. What is the entry? Commission income account debit to unearned commission or commission received in advance. Commission received in advance. How much? 5,000. 5,000. What is this? Reversal of income. What is this? Liability. Because in future, this worker does not pay, give the service, we have to refund this money back. So if we do not give the service, we have to refund the money back. So receive commission means we receive the commission. So if I don't give the service, I have to give the money back. So until I give the services, the money what I have, advance money what I have is my liability towards that fellow. So commission received to commission received advance. So when money is received, bank to commission received. Reversing commission received to the extent of advance money, and I'm creating a liability for it. Any problem in this? Sorry? This is the adjustment entry. This is called as adjusting entry. How will you do net? Because this entry is already recorded by the accountant. No? You are going and rectifying it. Now imagine you are recording this entry for the very first time. Means you are recording entry properly. In that case, what is the combined entry? Bank account debit 10,000. Let's suppose the accountant who is recording this, he knows this concept. So he will record beginning itself properly. To commission income 5,000. To commission received in advance 5,000. This kind of question will not come in exam. Because if the examiner itself is giving the right answer, then what is the point? So he will give you this situation. From this situation, I'll ask you to do a adjusting entry. So from examination point of view, this is more relevant. Now, if I go to my ICA module, fifth question was done. Sixth was done. Seventh, can we do it? Seventh, I'll discuss now. What is debit and what is credit? Can you take this as homework? We'll do it a little bit fast. Please tell me, Ramesh started business with 10 lakh rupees. Which account affected? Bank and capital. Nothing mentioned means bank. So what is entry? Bank to Ramesh capital. Any problem here? No. Bought goods for cash. Bought means what? Buy, bought. Singular, buy. Plural, bought. Bought goods. Why did I buy goods? With intention to sell. So this is purchase. So what is entry? Purchase to cash. Now the flow is coming. Initially, when you do the journal entries, now, whether in this book or from T.S. Reval, you will do the questions from the modern rule point of view. Every time you have to ask yourself a question. Purchase, why did I debit? Because purchase is expense. Expense is what balance? Debit balance. To increase expense, debit. Like that, you practice for 2 weeks. Once you practice it, no, the momentum is set. In future, whenever we do complicated question, you don't have to go and think. It will instantly come because subconsciously you've feeded your mind so much that even in a difficult situation, without thinking about it, instantly the answer comes. Like how, if I ask you what is the entry, Ramesh started business with cash. What is entry? Cash to capital. You're not even thinking because you have done so many entries based on that in 11th, 12th. Instantly it is coming. So now for 2 weeks, 3 weeks, practice the modern rule. Those who have done 11th and 12th CBC with me, no problem because multiple times I've revised in the class. So by default for it is there in your mind. But for metric people or those who are taking the classes for the very first time, you have to repeat this 2 weeks, 3 weeks, whenever you do journal. After a month, you'll become a pro in this modern rule. That's my promise and guarantee to all of you. Is it okay or not okay? Okay. Drew cash from bank. Drew cash from bank. Tell drawings to cash. Drawings will come into picture when they use the word for personal purpose. They didn't use the word personal purpose. Means in business, I wanted cash. I was not having money. I went to bank. From bank, I withdrew the money. So it is for the business purpose. So my bank balance will decrease. Cash balance will increase. To increase cash debit. To decrease bank debit. Sorry, bank credit. So cash account debit to bank. Cash account debit to bank. This entry is called as contra entry. Contra means what? I'm shifting the money from one of my pocket to another of my pocket only. From my one pocket to another pocket, the money is shifting. So hence we call this as contra entry. Correct? No. The money which is there in my bank is my one pocket. The money which is there in my cash is again my money in another pocket. So from one pocket to another pocket, if you shuffle the money, it is called as contra entry. This is not a regular entry. 13th, sold to Krishna. Goods on credit. Krishna is debtor. Debtor to sales. So Krishna account debit to sales. Krishna to sales. Any problem? How much is the value? Sir, 150 is the money that we have to receive from Krishna. Okay. I'm leaving this transaction. I'm going to 24 transaction. Received from Krishna 1,45,000. Allowed him discount 5,000. So can I say this is full and final settlement? Now, when you sold the goods to Krishna, what is entry? Krishna account debit to sales 1,50,000. When I debit Krishna, this goes and sits where? In the balance sheet asset side. Your balance sheet on asset side is screaming and telling, receive from Krishna 150, 150, 150. Shouting and telling. Now how much are you receiving? Only 145. How much is balance in Krishna's account? 5,000. So if you don't close Krishna's account by full 150, by mistakenly, let's suppose you're closing Krishna's account only by 145. Again, your balance sheet will scream, receive 5,000, 5,000, 5,000. Will you receive? No, because discount is already. So now close Krishna's account by entire 150. Krishna is asset. Krishna is asset. Asset is what balance? Debit balance. To create asset, you gave a debit. To close asset, credit. So if I put 2 Krishna in credit, do you have any problem? If I record 150, any problem? No, because this is full and final settlement. I have to finish him forever. So I have to give a credit and close it. How did you credit 150? Or why did you credit 150? Or why did you close Krishna's account? So because we received money. How much money you received? Bank account debit 145. What happened to remaining 5,000? Sir, you will never receive this. Is it a loss for me? Yes. Debit all expense and losses. So what is this? Discount allowed account debit 5,000. What discount this is? Cash or trade? Cash discount. So discount allowed account debit is cash discount. Any problem? Krishna to sales 150, 150. Bank discount to Krishna 145, 5,000 and 150. Now here in the LF column 1, 4, 7, 1, 5, 1, 9, 11. Whose phone number is this? This is nothing but this bank account is there. No, this 1 lakh is recorded in ledger. So which ledger you've recorded? For bank, we have 5 ledger. In the first ledger, we have recorded. Capital account, we have 4 ledger book. 4 books we have. In that 4th book, we have recorded. Like that dummy, they have given the value. Only to make us understand. Anywhere in the question, have they given the number? No. Something happened to ICA while doing the LF column. They recorded the number. Don't get scared. So they are only trying to convey that in case if this amount of 50,000 is transferred to purchase account, for purchase we have 6 book. This entry is posted in which book? Sorry, we have 8 book, let's suppose. This entry is posted in which book? 7th book number. That's all. Okay, but in exam, no need to write all this. Can I go forward? Is the pace okay now? Okay. Bought from Sham goods on credit. Purchase account debit. How much? 225. Why do debit 225 in purchase account? It is expense. Why did you record this expense in specifically purchase account? Because we promised to sell this. So this 225 being an expenses should be allowed to be recorded in purchase account only when you promise to sell. Otherwise not. Okay, you promise to sell 225 debited. Why it is expenses? Okay. 2. The question says that it is goods purchased on credit. Means what? I don't pay the money now. I'll pay it in future. Anything that I pay in future is liability. To create liability, credit to Sham account. Because I need to remember his name. Without remembering his name, how will I pay him? Hence, we have to record in the liability side of the balance sheet. Liability side represents or makes you understand that this is the money that I have to pay in future to these all people. So and so amount. Asset will remind you what and all you have to receive from the people and how much of the things you own it in the business. So that is a memory. Balance sheet is nothing but a replacement of your memory. So to Sham account 2,25,000 rupees. Okay. So now as per your ledger, your balance sheet is screaming and telling how much you have to pay to Sham. 225, 225, 225. Now, let's come to the next transaction. 28th. Paid to Sham only 250. Out of 225. What happened to remaining 10,000? Discount allowed. Discount allowed. Discount allowed is given. So, sir, we buy it, sir. Discount allowed is a loss. Debit all expense and losses. So what I'll do, sir? Discount allowed debit, sir. Buy it, no. Donkey fellow. Discount allowed by whom? Sham. Are we accounting from Sham's point of view? No. From our point of view. For him, if it is discount allowed, for us it is discount received. Who will write discount allowed debit and come in exam? Tell me, raise your hands. This discount received. So question is wrong, sir. Question is right. Discount allowed by whom? Sham. From his point of view, they are given the information. From your point of view, this is received. So it is your gain. Now, Sham's account I have to close. If I don't close it by 225, remaining 10,000 will be there in the liability side. As if I am supposed to pay him. Am I going to pay him? No, because it is full and final settlement. Sham is liability. To create liability, you gave a credit. To close liability, debit. So Sham account debit, how much? 225. You closed this account. Why? Because you paid the money. How much money you paid? 210 you paid. What happened to balance? 10,000. You did not pay. Will you pay in future? No. Will you pay in future? No. It is permanently settlement. I will not pay ever. So this money, what I'm never going to pay is my gain. When I agreed to pay 225, in that I am supposed to pay only 215 now. So balance 10, I'm never ever going to pay him. It's my permanent gain. So credit all income and gain. So to discount, received 10,000. Any problem? Online people, any problem? Online
No,
people?
sir.
Okay. Cash sales for the month. Cash account debit to sales. Any problem? No problem. Paid rent. Rent account debit to cash or bank? Bank. Rent to bank. Paid salary. Salary to Bank. Salary to bank. Now what have they done? Rent, salary to bank. They've combined it. We can also combine it to save time. Nothing wrong. So this question can take it as homework. Discussed so that if you have any doubts, we can discuss now itself. Any doubts so far? No doubts. Can I go forward? Okay. So you're going forward? Yes. Who's like, oh, shoe up in there? We have to finish journal boss today. Practical question, which is there after your end of the chapter. After the end of the respective unit, not chapter. This is unit 1, journal. At the end of the unit, you have something called as practical question. In that, can you take the first question as homework? Yes, sir. They're telling that show the classification of the following accounts under traditional and accounting equation approach. Accounting equation approach, leave it. Okay, you can do both also, nothing wrong. Now, just go through this and don't see this. Just try to classify as per your knowledge. In this, if you have any doubts, please ask me now. Don't see any of these things. Just see the question. I can sit and paint fully, no? Now tell. Okay, your doubt in sales tax payable. Okay. Where is GST? That we'll discuss. Apart from that, there's a foundation people. You not cheat. It's okay. Read the question, frame the answer in mind, then check whether the answer is matching or not matching. Do it fast. Here also, if you come and cheat, whom are you cheating? Your own self, your parents. Correct? Loss, bad debt is actually loss, but as per modern, the classification is what? Expense only. Either it is expense or revenue. Asset, liability, capital. So that's why they have written expense, but technically it is a loss. But classification rate expense only income. No problem. Everything is comfortable. Sales tax payable is nothing but GST payable. Means what? Payable, yet to pay. When will I pay? In future. Anything that I pay in future is liability. And this money you have to pay to government. Government is artificial personal account. So why this has to be paid to government? That I'll discuss when I do the GST part. Done? Okay. Now, coming to second question. Practical question 2. Very important. Pass journal entries for the following transaction in the books of Gamma Bros. What a name. Now, employee had taken inventory worth 1 lakh. Cost price 75,000 on the event of Deepavali, and the same was deducted from their salaries in the subsequent month. Clean, bold, sir. We thought after doing so many journal entries, we become pro in journal entry. What is this question? Like that, how many are feeling now? If you're not feeling this, then you have to give me the answer. Feeling clean, bold. Apply your mind. Don't get scared. See, this is the first part. Whenever you get any questions in your foundation exam, inter or final, that question will definitely try to scare you. If you get scared, no, you're defeated. Instead, don't get scared. The questions which are going to come to you will be tough only, no? Why will it come easy? Why will it come easy? It'll come tough only. So looking at the tough question, don't get scared. Understand the logic. What are they doing? There is one employee. Okay. What is he doing? He has taken the inventory. What is inventory? The goods which I purchased with intention to sell. So in my godown, the stock was there, intending to sell. That he has taken. Why? On the occasion of Deepali, we have the habit of distributing the gifts. So let's say this is a gift shop. I have the business of selling the gifts. So for my employee, I will not go and buy the gift from some other shopkeeper and give him. No, boss. I'll give my own gift. So like that, 75,000 worth of gift. Cost of gift. If I sell it at 1 lakh normally, but I gave it to him. I gave it to him. Later, look at me. I didn't give us a gift. I deducted from the salary. Then what gift is this? What Deepavali gift is this? Now, question is understood. Now, with whatever we discussed so far, apply the logic. This is not something which is new. This is something which you already studied. Today only studied. That is, last class also we studied. Today morning also we studied. First thing. Forget debit part. What is the credit part? Reversal of purchase. In place of the debit, what? Salary. Salary to purchase. Now, can I explain this part? Now, employer taken inventory worth 1 lakh. Worth 1 lakh means what? If I'm selling this, I'll sell it 1 lakh. Selling price is 1 lakh. What is my purchase price? 75,000. Please tell me, as a shopkeeper, when I was buying this product, was I aware that I'll give this, product to my staff, employee? No. I thought I will sell it. Thinking that I purchased the goods. Please tell me, at the time of purchasing this inventory, what would have been my journal entry? Purchase account debit to cash, bank, credit, or whatever it is. How much? 75,000, 75,000. This 75,000 is allowed to be recorded in the purchase account only if it is sold. Did you fulfill the promise? No. Instead of selling it, you gave it to your employee on cost to cost basis. Because we never charge profit from the employee. We give on cost to cost basis. You broke the promise. Now the purchase which is recorded in debit, to cancel I have to give a credit. So to purchase, I gave a credit of 75,000. In place of that, what I should give a debit? Now listen to me very carefully. Had they told this is not deducted from the salary, means I am giving the cost from my pocket. I am bearing this cost. In that case, I'll debit to staff welfare expense account debit 75,000 to purchase 75,000. Are you able to follow? Had I given this gift to employee, not deducting from the salary means I'm giving out of my own pocket. It is my expenditure. What expenditure? Business expenditure. This is what classification? This is my staff welfare classification. So this will be debited to staff welfare expenses. Any problem? But the question told you, no, we are not giving this free of cost. We are charging this money from salary. What money you're charging? Cost to cost basis. So I'm charging 75,000 in form of salary. So now, staff, this is company. Company is paying staff. Why? Because staff is given service. Staff is given service. So company is paying in form of cash. Any problem? So this means salary paid in form of cash. Instead of paying in cash, I'm paying in form of stock. What is problem? I'm paying in kind. So if I pay salary in cash, what is entry? Salary account debit to cash. It is my salary expenses. I got 75,000 worth of benefit service from the employee. So this is my employment cost. And for this, I'm paying 75,000 from the pocket. Now, instead of paying cash, I'm paying what? In form of stock to purchase how much? 75,000. So salary to purchase is the entry. Any problem? This 75,000 what I paid, I'm telling that this is the return consideration for the service what you give. You gave me service for 75,000. I'm paying you amount for 75,000. Instead of amount, this inventory. So ultimately, this salary is my expenditure, no boss. 75,000 worth of benefit I got. So this is my salary expenditure because I'm adjusting against salary. Instead of paying salary in cash, I'm paying salary in form of stock. And since I broke the promise, I'm reversing the purchase 75,000. Any problem in this? So entry for this is salary to purchase. Any problem? Nanda? No, got it. Anybody else who's got a doubt in this point? Now tell me, if I did not teach you the concept of reversal of purchase, will you be able to digest this point? You look and see the entire foundation book. Nowhere the concept of reversal of purchase separately, exclusively given. Exclusively it is not given. Directly it is involved where? In the sums. You don't believe me, no? Double entry system. Advantage of double entry system. Account, cash account, cash creditor account, debit credit meaning, accounting equation, accounting equation, increase decrease, increase decrease. Illustration 1. Transaction. What is the meaning of transaction? Accounting equation approach, tradition approach. Correct? Anywhere you've seen the reversal of purchase so far? Illustration 3. 1, 2, 3 we have not done. We've done from fourth one. This is what approach? Traditional approach. Golden rule. What rule? Golden rule. Golden rule example. Modern rule. Journal. Journalizing process. Journal format. Points to be taken into consideration. One debit, single entry, compound entry. Purchase, sale entry, cash entry, credit entry. Rent entry, salary entry, bank interest entry, compound entry. Illustration 4, which we worked out. No, we didn't work out. No, we didn't work out. So 1, 2, 3, 4, not yet done. Fifth one done?
Yes.
Yes. Drawings to purchase. This is where we studied the first time. Till this, anywhere purchase reversal is given. Illustration 6. Illustration 7, which we completed. In that, anywhere the concept of trade discount, cash discount is given. Trade discount, cash discount concept. Advantage of journal. It's directly accounting for GST. From here till end, GST. Where is the concept of trade discount? Where is the concept of cash discount? Where is the concept of rebate? Where is the concept of reversal of purchase? Tell me now. Like that, every chapter, how much it can be. I give one more example in partnership. Tell me which concept. When I did the past assessment, what did I tell? In one of the attempt, they asked the question for past assessment. Where in one PEP exam, there is no concept of past adjustment covered in your ICA book. Not even there in your matriculation book. So if the same question comes in the exam, how will you tackle? Now do you understand why I give emphasis to this TS level book? ICA says that whatever chapters I've told, from there anything can be asked. I never said that whatever I mentioned here, that only I'll ask. I can ask anything. That is what it means, no? And they can ask anything in the illustration or in exam where the concept is not explained. With that, what do you infer out of it? Correct? Like that, in many chapters, many concept is not covered here. All that is covered where? In my 11th CBC, 12th CBC. Now do you understand why the logic I tend to do my 11th, 12th CBC classes? Why do you think I should slog with my 11th and 12th classes? Like other academies, I can take directly foundation, inter, final. In fact, more money is there in 11th, sorry, inter, foundation, final. Because inter and final, I can record in Hindi language and English language till final. And once I go to inter and final, I am accessible to all over India. Correct, no? I can make more money out of there. To be very honest, that is true. You'll never find any academy who is teaching 11th and 12th. People for namesake, they'll put any staff, any teacher, they chumma for namesake they can run. But a proper accountant, chart accountant will never take 11th and 12th. You show me one academy who takes 11th and 12th properly. The main person, the person who knows the subject very strongly, he takes it. The reason I'm taking 11th, 12th is because to set a very strong base. If this is done, no, your foundation inter becomes very smooth. If I'm taking inter final, I can travel all the way, anywhere I can take the classes. I'm not tied up with offline classes. But 11th and 12th, every day I have class. Because of this, I'm not able to go anywhere. If any academy in Chennai, Bangalore, Hyderabad, if they call me, come and take class, I'm not able to go. Why? Because I'm tied up with the class. So why do you think I'm tying up myself with you all in 11th and 12th? So that I can give a proper strong base there. If I give a strong base there, no. When you come to me in foundation, inter, final, it becomes very easy for me to handhold you and mold you in a very easy manner. Otherwise, I'm locked in this 11th and 12th. I'm not able to do anything out of this. I've at least got calls from at least 6 or 7 institutions in the South India. Come and take class. I'm not able to go because I have everyday classes here evening, 11th, 12th. Why should I sit and teach? 11th, 12th is even more difficult to handle. You know why? Because parents are very deeply involved in 11th and 12th. Their involvement is not there much in foundation inter because they don't know what to do there. But in 11th and 12th, 9. So that also I have to bear. Why should I do all that? Why should I take so much extra effort? So despite all the hardships, if I'm taking 11th and 12th, then understand the seriousness of 11th and 12th accounts class that I'm asking you to take up in the foundation level. Either you do 11th and 12th with me in 11th and 12th then and there, or at least do it in the foundation level so that it doesn't become difficult when I come to a respective chapter. For the very first time this year, I've gone very slowly in the journal topic. Last year, this is what today, 4th class. Last time, I touched ledger and finished ledger by then. And I'm telling you, next 2 classes, I'll go slowly. After that, it'll be full speed. If you're not having a strong base in the 11th and 12th, in foundation, you'll have tough, difficult time. Though I'll take the classes slowly compared to other academies because I'll complete a portion only by October. For me, I believe in on-time completion of syllabus. Early completion also is bad. Late completion also is bad. If I complete your syllabus by August itself, what will you do? September, October, November, December, 4 months. Whatever you studied, everything will forget. There's no motivation to sit and study. If I take the classes till December end, what will happen? No revision time also. So September end, October mid, October end is the right time to complete the syllabus. So compared to other places, I'll take properly only. But that also will not be sufficient for you if your basics are not strong, is what my point is. So basics are very, very important. Especially when it comes to, again, 11th topic is still fine, manageable. 12th partnership and company accounts, you cannot manage in the foundation directly. Because too many concepts are there in 12th, which cannot be discussed extensively in the foundation. Guys, are you able to follow? So my humble request, whatever targets I'm giving, please fulfill then and there. Then and there, finish it off. Do not drag beyond a point. Now you're getting some luxury time till May end. Once your college all begin, no? College, CA together is going to be very tough. So whatever time you have got till May end, finish off all your backlogs of 11th classes and 12th classes. Do not prolong. Coming back, just 2 more transactions we are done. Wages paid for erection of machinery. We will study this in depreciation topic. That any expense incurred, any expenses incurred right from buying of the asset till the asset is put to use. Any expenses incurred right from buying of the asset till asset is put to use. Every in-between expenditure will be capitalized to the machinery account. So in the depreciation topic, this will be discussed in depth. So entry for this is not wages to cash or wages to bank. It is machinery account debit to bank. 18,000. Why? Because this wages is paid for the erection of machinery. Erection means what? Installation of the machinery. So any expenditure incurred in relation to asset, that expenses also will be recorded in the asset account itself. In depth, where will I take? Depreciation topic. Third point. Income tax liability of the owner, 70,000 was paid out of petty cash. Income tax liability of a sole proprietorship business, always drawings. So drawings account debit to, don't write cash. Cash means main cash. You're giving money out of petty cash. Main cash is separate, petty cash is separate. So to petty cash, 17,000. So drawings to petty cash. Don't write cash. Cash means main cashier cash. Petty cash means petty cashier's cash. Main cash, lakhs and rupees, crores of rupees. Petty cash means thousands of rupees, which an employee, small level employee is handling. When I do subsidiary book, that time I'll discuss what is the difference between petty cash and main cash. Fourth one, purchase goods from Naveen of the list price. Anywhere have you come across the word list price in the entire journal topic? In the ICA module? Now you know what is list price? Also called as mark price, also called as catalog price, also called as gross selling price or gross purchase price. 2 lakh. He allowed 10,000 as trade discount, 5,000 as cash discount for quick payment. Please tell me the presentation first. Purchase goods from Naveen. So am I talking from the buyer's point of view or seller's point of view? Buyer's point. So we are purchasing. So gross purchase price, also called as list price, also called as catalog price, also called as mark price, is how much? 2 lakh rupees. Minus trade discount at the rate of 10%. How much it is? 20,000 minus. Balance 1,80,000 is called as net purchase price. Net purchase price. Now from that minus cash discount at the rate of, it's the okay, they've given the amount, not percentage. Minus 5,000. This is the money that I'm going to receive. 1,75,000. For quick payment, instead I will use the word immediate payment. Means what? Immediately I'm getting the money in my bank account. Now tell me the entry for this. எங்கேம்மா போச்சு? You came starting, huh? வந்துச்சுமா. Now entry please. Purchase account debit 2 lakhs, sir. Can I record the purchase at gross price? Never at gross price, always at net price. If trade discount is not there, net price is same 2 lakh. So when I record 2 lakh, that is not gross purchase, still it is net only. So what is the amount? 1,80,000. So purchase account debit 1,80,000. 2 I'm making the payment, no? How much? 1,75,000. How much payment I'm not making? 5,000, which is my discount receipt. So purchase account debit to bank to discount receipt. The payment is done immediately. This is the entry. If the cash discount payment is done later stage, then what is the entry going to be? Purchase to Naveen 180. And then Naveen to bank to discount receipt. How much? 180, 175 and 5,000. Scenario is clear. What have they done here? Let's see. I think the first one they should have done. Nowhere it is told is credit purchase. Oh my God. So whenever the question is silent, because they didn't use the word immediate payment. For quick payment. Quick payment means anytime you can pay. So this is a separate transaction. This is a separate transaction. So you will go with this one in exam. The student may also note that the trade discount is allowed on the list price of the goods. It is deducted to compute the invoice amount of the goods to be recorded in the books. So always when I prepare the invoice, in the invoice you'll have the gross price minus trade discount. This net value, the net purchase price is the invoice price that you record in the purchase account. So this presentation in reality is done where, you know, this presentation, this first half presentation is done in your invoice. You take any invoice where you're getting bulk purchase, no? They will show that this is the trade discount and always they'll give you the net value. And the net value is what is the actual purchase price for you. So that's why they're telling that it is deducted to compute the invoice amount. So in the invoice amount, we're showing this presentation. So from the gross purchase price, I'm minusing the trade discount. Cash discount is allowed in case of early payment of the seller. Now here what they've used the word only early payment. But what did we learn? Immediate payment, early payment and prompt payment. For all these three, discount is allowed. The entry is made in the books of accounts for cash discount. You have to make the entry for cash discount in the books of accounts. Trade discount is not recorded in the books of accounts, but cash discount is recorded. Over? Yes. The remaining questions will be done later. Now, there's one more book that I'm going to give you, not book, PDF. This is called as chapter 4 of your TS Rival book, which is called as Basis of Accounting. Today morning, we learned Basis of Accounting. In this, there are a few questions. This, if it is cash basis, then how will you record? If it is accrual basis, then how will you record? Like that, there are a few questions based on this. I want you to take these illustrations as homework. So illustration 1, 2, 3, 4. All these 4 questions are there as your questions in this chapter, which will be homework. So if you know the concept well, you will be able to crack all these 4 questions in an easy manner. First 2 questions, jujub, you'll do it. Next 2 questions are challenging. If you know the concept, without my help, you can crack it. If you don't know the concept, if you're not strong, you'll definitely come back and ask me for doubts. Can I expect all of you to come back to me for doubts? No? Okay. So your target for next classes, before you are here, next class. Whatever the questions are there in the journal topics, and whatever questions are there in your basis of accounting topic, will be taken as homework. Next class is too early to finish or can be done. Hema, 15 questions மேல இருக்குமா? Yeah, 15 plus questions. Do it. No, don't think that sir will not check. So once you're here, I'll ask Sangamyaka to randomly check your books. So every time you do homework, randomly we'll be checking the books. Today is what, Monday? No. Wednesday. Friday morning? For next class, you can do it. As much as you can, you do and come. Max to max, I'll give you time till Sunday. By Sunday, you should be done and dusted with this, both questions of journal and basis of accounting. Possible? Any difficulty? Now listen to me very carefully. I'm telling you, I told you last class, those who have opted for my 11th classes, you should finish the classes before I start the class in the foundation. At each chapter, when I start in foundation, you have to finish it. Those who have already done 11th and 12th with me, what I tell you, you have to do your practice from that book. So I should give a target, which month, what I have to finish. So we are in April month, correct? April month, you should be pro in your rules of debit and credit. Then journal entry chapter, which is this chapter. All the questions from this you should have done, and all the classes by now you should have completed watching. Then ledger, trial balance. This is your target for the month of April. This is the target for the month of April. Depreciation also, if you start, better it is. DP stands for depreciation. So April month target is depreciation. Possible? Not possible. Possible. Not possible? Possible. Neha, what happened? Nothing, no? Okay. May month target. What is May month target? What is the next topic? GST don't take care of. The GST I'll take care of in the foundation properly. So GST part I'll take care of. Don't hesitate. I want to do rectification after final accounts. So I will do bill of exchange, then I'll do depreciation. Bill of exchange not required from 11th standard. If you do it well and good. But bill of exchange in 11th CBSE book, it is not there. I want to share the PDF. It will be 3 years ago. One PDF will be there. Lectures is there. YouTube, I think full bill of exchange lecture is there. If you want, you can take it from there. I'll share it. So what you can do is, no, 11th CBSE also is there, but I think not required. Bill of exchange, I'll take it from scratch properly itself. Leave it. Leave bill of exchange. No problem. May month target is rectification of error, final accounts, adjustment of final accounts. By June month, first half itself, you should be done with BRS. Anything else covered in 11th? Subsidiary book, leave it. Subsidiary book from CBSE book makes no sense because that is ulta given. So you'll go with what is studied in matriculation. So that is what is there in the foundation also. So subsidiary book, GST part, fresh, I will take care of. Single entry. Incomplete records. Incomplete records. These are the 11th portion you have to complete by this month. This is the target. So as and when you complete these topics in 11th, I'll take in foundation. As and when you complete this topic in 11th, I'll take in foundation. So it'll go in pure, proper sync it will. Any problem with this? Partnership, anyways, you're doing with me. Partnership is going on. Partnership, today I'll be completing the fundamentals. By April end, I want you to complete the fundamentals of partnership from your ICAI module. In that, you will have a struggle in some questions. Whatever questions you have doubt, mark it, note it, and leave it. I will take care of it when I do partnership in the foundation. That time I'll take care of. May month, I'll complete 2 topics. Goodwill will be completed. CPSR will be completed. Admission, I'll start it, but not possible to complete. CPSR will complete it. So this question you have to finish in your ICA module. June, I'll be completing admission topic. Immediately, if I complete admission, you have to start the question from your admission of the ICA module. Retirement. July, death of a partner and dissolution. So the moment I complete the partnership topic in 12th, immediately you take the questions I work out from your ICA module. When you do so, 70% of the questions you can manage because it is based on what you have studied. Remaining 30%, I have to teach you when I come to partnership topic when I take in the month of August, September. Okay. This is the target for those people who are currently doing live 12th CBSE class with me. For those who have already done 12th with me last time, you need not wait till July to complete dissolution. For you, the target is May end. May end, you should be done with partnership. June end, you should be done with company accounts. June end, you should be done with the company accounts. You people who are doing class with me, August month, you'll do company accounts. August or September, you'll complete your company accounts in the 12th CBSE. No, immediately you'll do company accounts in the foundation by yourself. Company accounts, 90% to 95% is same what we studied in 12th CBSE. In fact, 12th CBSE level is a little bit higher compared to foundation. So that itself you take care of. 90% of your company accounts is over there. Company account means what? I'm talking about issue of share capital and issue of debenture only. This two only you can do it. Rest all, redemption of debenture, redemption of preferential, bonus issue, rights issue, I'll do it afresh when I start taking company accounts for you in the month of September. Am I loud and clear? Is the roadmap clear? These are the deadlines by when you have to finish the topics. TS level book, work out before I start working out the ICA model. In that, if you find any question which is very tricky, which is very unique, highlight that you have to revise before the foundation exam. ICA module, anyways, you will revise 2-3 times till the main exam. So that you do. But sometime there are some questions, better questions in the TS level. That also you revise is my point. Not all the questions. Let's say out of 50 questions of TS level book in any chapter, 5 to 8 questions will be very important. That type of question you'll never find in foundation book also. That you keep on revising till the end of the board exam. That is till the end of your foundation exam. Whereas the remaining 40-45 questions are there. No. Do it once, know it and leave it. These are those 45 questions you can manage anyhow you want. Are able to follow? But these are the remaining 5-10% questions you have to practice till the foundation exams. Any problem in this? No problem. Any difficulties? No difficulties. Okay. Test May mid. From May mid, your test will regularly start. From May mid, regularly test will start. So be prepared then and there. Once I start taking test, no, there will be no breathing space. Once in every 2-3 days. Once in 3-4 days, there will be test back to back. Monday accounts, max, law, economics, this, that. In a week, how many tests? Minimum 4 tests. In a week, how many tests? Minimum 4 tests. Because you have to give 120 tests, no? How many weeks till December? Forget April, May, June, July, August, September, October, November, December. 8 months. 8 fours are 32. 32 weeks. 32 into 4 is how much? 128. So approximately 4 tests in a week. If you start taking less than 4 tests in a week, your dream of getting 120 tests is not going to be possible. Your dream of scoring 95 is going to go for a toss. Then from 95 you come to 90. Once your run rate is 2 tests per week, then from the dream of 90 come to dream of 70, 80 only for accounts. Okay, not okay. So if you want to get 90 and above, 120 tests are compulsory. Okay, not okay. Okay, not okay. Yes, sir. Roadmap is clear? Yes. Wonderful. Can I wind up? Let us talk next class. Why everything in one class loaded? Okay, so mostly 4th is doubtful. I don't know. I'm not sure. 5th of May, 6th of May, 7th of May, 8th of May. Relaxation for us, sir. For relaxation. Primarily, this relaxation is for us. But I'm thinking somewhere I'll involve you guys also so that you can also relax. Only somewhere. Max may come. Max, no. See, if you're giving, then give full holiday. Tumma one class, which then what is the point? Next week, I don't have slot for Max. That's okay. 4 days, ma'am can adjust. Somewhere we'll 4 days holidays. Can we plan? This is 4th is what? Sunday, no? Sunday. Sunday, Monday, Tuesday, Wednesday, Thursday. Okay, wow. I'm trying my level best to give you holiday from Sunday, but that depends on my goodwill completion topic. 12th, we're doing goodwill, no? I have to finish that. So I don't think I'll be able to complete by 2nd. If at all required, but 4th we'll have full day class. That is not full day, means 10 to 2. 4 hours of class, and I'll finish off the goodwill topic. Okay, wow. So 5 to 8 confirm holiday, 4 is 50-50. You talk to Marsha ma'am and you give them off, nothing wrong. They will do heavy lifting where after you come from 8th, no, 9th onwards, you do heavy lifting. We'll do extra classes and all. 10, 12, 14 hours you can study. Correct, no? Any doubts? No doubt? Clear? Can we end up? Chalo. Guys, that's all from my side for this session. I'll see you all on Friday, 11 a.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you.
Thank you,
Thank you.
sir.
Thank you.
Thank you.
Thank you. Thank you. Thank you.